fish instead of children later.
Have the companies ever said when it will be available in like just a pill?
They're all
studying for the pill because they know that if you can unlock that, and that's what we're seeing with a lot of the smaller cap biotechs, is they want to study, they want to try to leapfrog the Novos of the world, the Eli Lillys.
How hard is it to take something that's in a liquid form and make it into a tablet? Put it in a little gel cap and I'll swallow it, right? Or somebody will swallow it.
I mean, I think people will take it. I think this is one of those, it's almost like the COVID vaccines when they were studying those. I think people are lining up if they can get access to it. Because if you can't get a prescription written and you got to pay however many thousands of dollars a year for the shot, why not do a drug for free?
By the way, Bloomberg's offering the flu shot next week down in LL2. I expect both of you to.
I'm going to go get it.
Darn right.
Even though I have no idea what's in it or the long-term effects on my health.
Right.
I'm just going to blindly take it because that's what I do.
That's what I do. Bailey Lipschultz, thanks so much for joining us. Bailey covers all the equity markets for us. Let's talk about labor, and I want to start with just this whole back-to-work thing. Because it's a thing, and it's going to stay a thing for a long time. Shannon Gabriel, she pays attention to this stuff. She's a vice president, leadership solutions at TBM Consulting Group. Shannon, Matt and I, because just the nature of our jobs, we're back in the office every day of the week. It's 5 days. It was never really an option. But we're not the norm, are we? Talk to us about where we are with this whole back to work and hybrid schedules, and what are we seeing these days?
It's a thing, and it's not a nice thing depending on what side of the fence you sit on. So right now we're seeing a trend where companies are asking people to come back 3 days a week. Start off with 2. September 1st launched a lot of folks that wanted them to come back 3 days a week, and not just any 3 days of those 5 days. They want them to come back on specific days: Monday, Tuesday, Wednesday, Tuesday, Wednesday, Thursday. So they're defining the schedule for them so that everyone's in the office at the same time, and they can start building that synergy and that culture. Which I can air quote, and that's the reason why they want them to come back. But the employees are resistant because they've proven their effectiveness, and they've got to build this work-life balance from having the flexibility to work hybrid or remote whenever they wanted to.
So how much power do the employees have? I mean, we've seen, in terms of organized labor, some big wins for unions nationally. What about the companies that you consult with? Are employee bases stronger than they have been pre-pandemic?
The employees that are currently employed are reluctant to push back. When they do push back, and it's casual. I'm not going to make it in on Wednesday this week because I've got plans with my family that I can't get out of. I've got a commitment with a doctor that I can't get out of. And companies aren't pushing back on those minor setbacks. But what we are seeing right now, and you can see it with all the data reports that come out from the search engines, from Indeed, from LinkedIn, is that the number of people that are applying to positions that offer remote or hybrid are getting twice as many applicants as those that require you to be in the office every single day. That's where the loss is.
I can see that. And, another issue for this whole thing, and I think we're seeing it a little bit with the auto worker strike, which is we're creating or maybe exacerbating the split between the haves and the have-nots. There's some people that have to come into work 5 days a week or every day that they're asked to, and then the others that have
on the factory floor, you're not working from home.
Exactly, the essential workers, versus maybe the white-collar folks who. So you're really exacerbating that split between the blue-collar and the white-collar. How are companies thinking about that?
Well, the essential workers and the ones that are on the shop floor never stopped working. They worked through the entire COVID pandemic every single day. They sometimes were working 6-7 days a week. Yep. And so, and those are the ones that are burned out. I mean, that's one of the reasons why you're seeing the trend right now, especially with the UAW strike that's happening and others, is that the burnout is so high for them because they never got the break. They've been going in day after day. They're covering for the other employees that are calling in or not calling in, just not showing up because they're burned out. And the only way they can get a day off is to take one by calling in sick. So their colleagues have to make up for that. They still have to be productive. They still have to get the product out the door. So those essential workers are calling the shots on their own as much as they can. There's not as much accountability today as there was 3 years ago pre-pandemic, because companies were forced to relinquish the control that they had and stick to those strict metrics of their absenteeism policies.
Man, if I were running a company, I would hope that the majority of my workers are essential. Otherwise, what am I paying you for?
That's a great point.
If you're not essential, please report to HR right now. What are you telling the leaders that you're head of leadership solutions. at a consulting group, TBM. So what are you telling the leaders in terms of how to deal with this, with these uncharted waters?
I'm telling them to find flexibility where you can. And if it means that they have to be in, and a lot of companies do require people to be in 5 days a week, they don't have the option all the time. But I'm telling them, find flexibility where you can, give back, find a way to build something within your culture, something within your dynamic that's going to give them the opportunity to have some flexibility, because flexibility right now is key. It's a harsh return when you don't go to the office or you don't go into the facility and then all of a sudden you are. So if you can find measures to give back to them to create some type of harmony, it's not always in a paycheck. It's not always in improving benefits. It's giving them extra PTO. That's not going to cost the company that much more money if you break it down. And I think that's where they're going to build some tenure. And tenure is a big issue for a lot of these companies. A lot of these leaders, it's the number one thing that they talk about. Even within private equity, human capital still remains
in what sense, Shannon? So, are you saying that companies don't have enough workers who have been there for more than 1 or 2 years? They don't have enough people with experience that know the company, know the industry?
In some instances, yes. In some instances, I would say that these companies have had such a revolving door that they can't train people up enough and fast enough to make them effective. They come in and they have a quick quit. They leave within a week. They leave within 30 days. The majority of the turnover we see is within 6 months. It's when the onboarding stops. So when the onboarding stops, the hand-holding stops, the engagement stops, the touch points stop, the training can stop, and that's when they start losing those employees. That's mostly on the shop floor. I would say that those within the leadership ranks, the turnover is happening within the first year. They realize quickly that this isn't what I signed up for. This isn't what they told me it would be like in the interview. Either I overlooked it or they oversold it.
It's interesting, a lot of cynics out there, I'm not sure I'm one of them, but some of the cynics say, hey, just wait for the next recession. That'll put things back into balance.
Dude, you're definitely one of them.
I am?
Yes.
Okay.
You're one of those cynics.
Okay.
Yeah, when you start to see interest rates rise, when you start to see wobbles in the economy, if you did see a recession and jobs become scarce, surely people who insisted on work from home, Shannon, would be like, okay, I'll go to the office.
They will. They absolutely will. And the other thing that we've seen, and you can see it in the data reports, that June and July, we had far less quits than we did, and resignations than we did in August, right? So people, when the recession happens and talks of a recession happen, it's not even when the recession happens, it's just the talk of it. When that occurs, people get resistance. The W knows better than the W don't. So they're going to stay put and stay home and stay with that current employer no matter how bad it is, because they are a known commodity. They have a proven history with that organization. The fear is if I go somewhere else, I'm not going to see their financials up front. They're not going to share with me all the negative energy that's happened within this organization. So I may be losing something that's quasi-stable and going to something that's at high risk. So we'll see that things will turn if we do go into a stronger element of a recession. The employers will have the upper hand.
One of the things. Yeah, one of the things I have 3 offspring that are in the workforce, and I've kind of told them, and maybe I don't know if this is good advice, but I just say maximize the amount of time that you are able to be in the office, because I do believe that there is networking effects. I do believe it gives you an advantage versus your peers in forming relationships. Is that good advice, or am I just too old school?
No, the feedback that I hear out in the marketplace is that capitalizing on your network and expanding it and actually, developing a network is the most effective way, not only to find a job, but to keep your job.
Okay.
So
all right, we're going to have to leave right there. Thank you very much. We appreciate that. We were speaking with Shannon Gable, VP Leadership Solutions at TBM Consulting. Right now, let's go to Lisa Brumwitz, sitting down with San Francisco Fed President Mary Daly at the Economic Club of New York. Let's go there.
The June SEP, where, if you remember, or maybe you don't, I'll remind. In the June summary of economic projections, there were 2 more rate hikes projected for this year. Then in July, we took one of those rate hikes, and another one in the September SEP was the median outlook. But the bond market has tightened quite considerably, over about 36 basis points since we met in September. Well, that is equivalent to about a rate hike, right? And so then the need to do tightening additionally is not there. So from my own perspective, that's what I look at. That my job as I see it, our job as I see it, is not to tighten, just do our part. It's to watch financial conditions because monetary policy works. We raise the funds rate and it moves through all the other interest rates. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Yeah,
does that make sense?
Absolutely. And Rich Clarida said today that the rise in yields actually does the Fed's job for it. Would you agree with that? Would you sympathize with that kind of sentiment?
That is actually how it works, right? If financial conditions tighten, I mean, one of the things that's happened in the last 90 days and certainly in the last few weeks is that financial markets have collectively seemed to take on board a variety of things. But one of the things that I heard from many commentators and many of the market outreach I do is that they have a general understanding now that we are committed at the FOMC to keeping rates higher for longer in an effort to bring inflation fully back down to 2%. And that recognition, along with all the other factors we could put in a list about why bond yields have risen, are affecting certainly the financial conditions and the tightening. And I see that as a positive outcome, that we would have tighter financial conditions because then we can really get the job done of putting inflation back to rest.
When is a sell-off something that's welcome from a perspective of finally the market is coming to terms with what the Fed has been saying? And when is it disorderly, disruptive on a level that causes concern?
So you always want an orderly repricing over a disorderly repricing. And so far, what I see is this, and this is why we watch it so carefully, but here's how I'm seeing it, is that what is happening is financial markets are actually trying to find their footing in the right price for things. And they've got to digest a lot of information. One is the supply and demand changes in the treasury space, right? So supply is going up and demand is going down, especially from foreign buyers. So that is one factor to digest. Another factor to digest is Fed policy and forward guidance in the SEP. A third factor to digest is this increasing conversation people are having about whether the real neutral rate of interest has actually risen. So we came into the pandemic with it at about 0.5, which means nominal neutral about 2.5. And when people say, oh, the neutral rate might have risen for a variety of factors, I'm hearing everything from maybe it's 5 to something that I would see more likely, which is between 2.5 and 3 for the nominal neutral. Probably we don't know if it's risen, frankly. I don't think anybody really knows, but certainly we should have those conversations. But then markets try to price that in. So all of those factors, and then there's lots of uncertainty in the economy and geopolitical risk and our own fiscal risk. And so that's what markets do. They digest a lot of information and try to find their footing on it. And I think that's what we're seeing. But so far, it hasn't spilled over into disorderly. So far, even today, when the jobs claims came up and it was sort of, I don't know what to make of it, right? So that's what the markets sort of read it. You didn't see things shaking up in a wild or disorderly fashion. So far, so good.
Your bond quote of the day, 470 on the 10-year. I just checked. So it seems like yields are coming in as we speak, to your point about it not being disorderly. Back in March, when there was this concern about the banking situation, yields were at the low of March, were about 150 basis points lower than where they are now. Are you seeing the same type of financial distress today that you did back then, even on the peripheries? How do you rationalize why it hasn't materialized in the same kind of way?
So March was a unique situation, and we want to learn from that unique situation. But it was a unique situation in this way. We had a bank run, a very old-fashioned but true bank run, where the bank's liquidity was completely squeezed, and it dissolved in a period that was it was short, rapid period of dissolution, and then that spilled over to 2 other banks. And that was the extent. Now, one of the things I always remind people of is we have over 4,000 banks in the country and 3 failed. And all other banks that even felt the stresses, and there were a large number that felt stresses because they were near neighbors in sort of size and balance sheet distribution, composition. They felt stresses, but they managed those stresses because in part they had been a little more effective at hedging their risks. And then the Fed and with the Treasury support came in with the BTFP, and that produced a lot of calmness in the water. So since that time, banking stresses have really not been something that when you ask people in the community or the business leaders, what are you top of your worries? That is not something they list. They list inflation, uncertainty, et cetera. So I think one of the reasons that we are seeing this yield rising not spilling back over is that essentially we know what's going on in the banking sector. Investor letters have been published for months saying, here's what this balance sheet looks like, here's what this balance sheet looks like. So there's not a surprise. And the second is because the banking system is safe, sound, and resilient, and we have remedies in place that solved parts of the crisis and the stresses. So I think we're coming in, it's the same thing when you have the rise in yields. We're doing it against a strong economy. We're doing it against a strong, a solid banking system. So that just means that the ripple effects are not going to be tipping things over. The fragility is not there, right? It's a sound system, and then you have this, and so then you have it able to absorb the tension points.
One thing that there's been a huge debate around is the long and variable lags. And this really speaks to this question of all of a sudden, if you think that 10-year yields are at 5% rather than 4% or 3.5%, that changes what implication there is into different business models. How much does it change the business model of commercial real estate owners, of different residential real estate owners, of some of the constituents who you speak to on a regular basis?
So I'm going to separate, that's a terrific question, but I'm going to unpack it into two parts if you don't mind. The long and variable lags and the how are people reacting to that? And I just met with a variety of commercial real estate CEOs with national footprints on Monday, so I can bring some of that to this conversation. But let me start with the long and variable lags part. So definitely there's always a debate. If you want to really get into debate, get a PhD in economics, and you'll spend a lot of time if you're in macro debating long and variable lags of monetary policy. So here's what we can all agree on. There are lags and they're variable. And then people even debate about how long are they? But I go with long and variable lags. And the question is, we know that from the Fed's communications to financial markets went quickly. And then the question is, how long does it take to get through the economy? I'm of the view that we're still seeing the effects of that. We saw it initially in housing, then we started seeing it in investment. Now we're starting to see it in, the labor market and inflation, et cetera. And so it's absolutely happening. And we want to continue to watch that because we're with the risk more balanced on the economy. We could easily, I think at this point, overcorrect than undercorrect. And that's why taking the time to do it right is sort of where I think we need to be. Now, on what I'm hearing in these rising yields, they have been less concerned, at least my commercial real estate roundtable, less concerned about the lags in monetary policy as much as this. There is this time when people were in, one person described it as sort of it's almost like a foot race, right? But it's not really, it's really just like I have to see if the Fed will cut rates before I have to refinance my properties. And so you're in a look ahead and you're saying, well, if the Fed cuts rates like the market suggests they will, market suggested 6 months ago, early in 2024, or at least by the middle of 2024, then by the time I refinance, I'm golden. But that equation changes if we're higher for longer to get inflation down, or if the yields are just going to be higher, well, then projects that penciled out at near zero interest rates or something much lower, they don't pencil out at 5. And so I think one of the things that we think a lot about is what's the switch point for commercial real estate? Because you really want that to be an orderly repricing, and so far it has been, rather than a disorderly one. But I think that's a risk worth watching, is that these higher yields change the psychology of what's possible for people, and they start making those adjustments immediately, as opposed to in a timeline that goes with the refi schedule.
Just to build on that, this idea of 5% or 4.8 or 4.7% of long-term rates that's being increasingly priced into markets, how much does that imply a significantly greater degree of distress in some of these areas, like real estate, commercial real estate, that rely on this idea of refinancing 5-10 years down the line?
I think we have to, and this is one of the things we're going to have to do just as a nation, is if we're in a higher interest rate environment in general, and I don't think we should jump to the conclusion that that's where we are. I think we should have a conversation. Is it going to be the low interest rate environment? Are we going to have a nominal neutral of 2.5, or is it going to be something higher? Are we going to be fighting inflation from above our target now for a persistent amount of time, or is it going to go back to fighting it from below our target? We don't know the answers yet. So I think what was really important is commercial real estate owners and purchasers and things, they have to be willing to play the longer game, right? What's the longer game look like, and how do I get to the longer game? And I'm hearing this in the San Francisco CEO roundtable. Now, again, these folks have a national footprint, but I'll share what I learned is that, they're already tranching their properties. If you've got really high quality stuff, you're putting all your work in terms of leasing into that property, and there are deals to be had. So people with income to use, they're buying those properties up because property ultimately in buildings are valuable down the road. If you have property that you think isn't just in the world of higher interest rates and lower okay, I'm going to go back to the land value, and I'm going to not try to spend a lot of time leasing that property or wait it out and I think that's the repricing we're going to need to see. We are just going to need to digest some of those losses and position for the new world. The yields going up, I think it doesn't change that dynamic. It just brings people's awareness sharply to the problem, right? You could have seen the problem coming, and I think many did. And the way that the successful ones persist is they recognize that the down point isn't forever, nor is the high point. So they get used to it, and they stockpile, and they refi early. When they see interest rates going up, they're trying to put stuff into longer maturity so that they can not have to refi at the higher interest rates right away. So I think that's going on, but that is a sector to watch, as all of us know. And this will be just another piece. The higher bond yields will be another piece that makes the scrutiny have to be more intense.
To connect that to the idea of financial distress, people talk about a Fed put. How high is the bar for the Fed put? How high is the bar for financial distress for the Federal Reserve to come in and to cut rates and to take actions to add liquidity to the system? How much higher is the bar at a time where inflation is still running at the levels that it's running?
So I'm going to separate these two things. I think they get pushed together all the time in a way that I don't think about them, so I want to separate them. So there's monetary policy that's about the two goals that Congress gave us: full employment, price stability. And we raise and lower the funds rate to do those types that work. And because this all gets conflated more easily because we have a balance sheet policy. So we use the asset purchases for two functions: market dysfunction and quantitative easing, right? To put additional policy accommodation in when we hit the ZLB. So we have both, but they can actually persist separately. So let's take the BTFP. The BTFP didn't change monetary policy. We went in, we saw some stress in the banking sector with the backstop from the Treasury, opened the BTFP facility, helped calm the banking stresses, and monetary policy went on. And I think that's the way you should think about it. So I unpack those things. I hear a lot about the Fed put and this. What I really would do is we have tools that can be used, and the tools we use for financial dislocation are different than the tools we use for monetary policy, and both can occur. So we shouldn't have to give up our promise to the American people, our commitment to achieve our mandated goals and bring inflation back down to price stability because we have some dysfunction in the markets. But I right now don't see dysfunction. What I see is prices have gone up for bond yields, prices have gone down, yields have gone up for bonds. The 10-year now and other rates look similar to what we might have penciled in the SEP for how much we were going to hold rates higher for longer because of the inflation. And I think they'll respond as the data come in I think markets have a better sense now, although I can't be sure of this. I don't want to say things that I don't have certainty about, but it seems there's a more of an understanding about the Fed's reaction function now. And big part of the reaction function understanding that seemed to be missing was that we want to get inflation down to 2%. And in our forecast, we don't see it coming down to 2% like that. And in order to keep it coming down to 2%, we have to keep rates restrictive in order to bring the economy more into balance, the labor market into balance, and inflation down to 2%.
You talked about vigilance and you talked about agility. And with respect to agility, You wanted to be able to tweak policy according to what you're seeing in markets. And one thing that people have been speculating, and I'm sure this is sort of one of these theoreticals that make you roll your eyes. Goodness.
I never roll my eyes.
Well, I will say, when people talk about what you said in your speech, which is that as inflation falls and as growth slows, that the policy rate, even by not moving, by keeping it steady, is a policy action, and it is actually tightening policy. At that point, how agile should the Fed be to make adjustments to the rate so that the restrictive level is the same, that might be lowering rates, but not because of financial distress, not because of some sort of recession, not because of weakness?
So that's a terrific question. And I would argue that we're now entering into the hardest phases of policymaking, right? The hardest part. So I think of phase one is the one we completed. We completed it earlier this year. Rates are too low, inflation's too high. There's only one direction, north. So everybody can agree, nobody's confused. It's just a matter of how quickly can you get to restrictive territory and without causing any concerning disruptions. So we've accomplished that, phase one. Phase one was the easy phase. You just have to communicate, we're going that way, inflation will come down. The biggest concern that I had during that phase one, well, I had two, how fast can we go without, distressing things? And two, how will we communicate that we're doing that, right? Those are the two things I was worried about. How fast can we go and how can we communicate that so that we don't lose credibility, right? Because I was worried about the inflation expectation. So that's down. Phase two is fine tuning where we maintain the peak rate. And then phase three is trying to bring it down to 2%. And so right now, the way it's penciled in the SEP, if the inflation forecast holds, and the inflation forecast you see more generally, policy is growing more restrictive. So you might ask, well, why? Well, I think it's because it's challenging to get that super core inflation down. We've got the easy ones behind us, right? Goods inflation's already come down a lot. Housing inflation is in train. We have to keep watching it. But that super core is going to need persistent work. But if we saw, and the labor market's strong, we're doing this against a very strong labor market. We'll see tomorrow if that persists, but so far, pretty strong, solid labor market, good consumer spending, good GDP growth. I mean, there's nothing about the economy that's faltering. So, but if that should change, well, then of course we could adjust rates so that we keep a level of restriction right for the economy we have. I don't really want to try to tell you what that's going to be because honestly, that's what the whole speech is about. We have to tolerate our uncertainty of not knowing what it's going to do next year, but to know what elements we have and how would we react to whatever situation unfolds. That's ultimately humans hate this and markets hate it more. Nobody likes uncertainty, right? They want to know, we all want to know exactly what's going to happen. But I think right now, projecting too confidently what will happen is actually a policy mistake, because then you end up with surprising people and things. So I think it's really important that we stick to conveying our reaction function, conveying how we trade off and balance things, how we approach the uncertainties. And then as we get more information, as everybody does, then we'll of course see what to do next.
With respect to the actual economy and what's going on and what you see going on there, you talk about the labor market and how strong the labor market is. And I know you've done an incredible amount of research in economic inequality and the worker and the labor market. Through
labor actions, but in general, we've seen a rebalancing of the labor relationships with firms. That is a very common occurrence in an extremely tight labor market, right? Their demand for workers is outstripped supply of workers. That means that workers would have more power to say, I want to live here, do this, have this other thing. So workers who aren't in unions and don't have regularly scheduled negotiated contracts, well, they can make those adjustments more continuously, right? So I'm sure you've experienced this too, but if you were an employer in 22 and even late 21, and you really saw wage demands rise, special circumstances. I want to live in here and work in there, and I don't want to come back to the office. A lot of changes in how workers were relating to their employers. And there was also a relative demand shock for low wage workers that, moved restaurant workers and hotel workers to delivery drivers and other things. So that whole work situation was changed. I see the labor actions that have been taken recently is they're on regularly negotiated contract schedules, and those schedules came up and they say, well, a lot's changed since we negotiated the last contract. Pandemic, wage rates have risen. We have not been in continuous negotiations with you, and we want to get in a better negotiation with you to ensure that we have some shared responsibility for the rapidly rising inflation and rapidly rising changes in the contours of the labor market. So I think to answer your question, I think this is completely predictable given the imbalance we've had between demand and supply for workers. And there are going to be some renegotiations either in continuous space, like we have been seeing, or when contracts become up for negotiation, you have to renegotiate the terms of employment.
What's the difference between renegotiating the terms of your employment and a wage price spiral?
Oh, that's a huge difference. So I love that kind of question. Fantastic. Okay. So
I'm straight.
Labor renegotiations I'm looking at, what I've had to put up, what I've had to deal with as an employee. A lot of it is I've got this wage and inflation's going up this, so my real wage is falling. That's something that was commonly happening in 22 in the United States. Real wages were falling for many, many groups of workers, many tiers of wages. And that's something workers recognize, right? They recognize when the real wages are falling. You're losing purchasing power, they're falling behind even though they're earning. So that is what a labor negotiation is. It also could be like in healthcare and things, hours worked, terms of trade, schedules, et cetera. A wage price spiral is that people get wage growth and then firms selling pass that along to consumers. That causes inflation to go up, and then they see that inflation and they ask for wage growth. And you see this high correlation. A fact that's worth looking at, it's a very cool plot because it tells you why we're not in a wage price spiral right now, is prior to 85, the correlation between wage growth and price growth was like 0.85. That broke down after the Volcker disinflation, and it really is now like 0.25, 0.3, et cetera. So you don't have that one-for-one pass-through of wages to prices, prices to wages. It just doesn't work that way. And even now you see wage growth moderating. And I also look at short-run inflation expectations. Short-run inflation expectations are coming down. As they come down, research out of the San Francisco Fed has shown, and others have confirmed this, that short-run inflation expectations are what people are using when they go in to negotiate wages. And so as those come down, you get release of wage pressure. So the worries about wage price spiral, people were worried about it in 22, and we took that very seriously. We asked how that was going. At this point, those have really abated. And now we're really at a point about getting the wage growth rate to be balanced in the economy, bringing the labor market into balance, adding the kinds that, we need about 100,000 jobs per month to keep pace with the labor force growth. At the last call, we were at 150. So tomorrow's labor market report will tell us whether we've made more progress on that space or just sort of in that same place we've been in. But that's how it's different. They're completely different. One keeps me up at night. One is just a natural part of an economy.
So I love that when we were speaking ahead of this, we were talking about anecdotal data. And I said, I love that you study the sociology of markets, and anecdotes are really important. As you said, I don't view them as anecdotes. They're qualitative data.
I think I said it that way.
You did, and you corrected me. You said, absolutely not. I wouldn't call it anecdotes. It is qualitative data. What is the qualitative data or the anecdotes that the conversations you're having?
Here's why I don't call them anecdotes, because anecdotes are like I talked to Bob in the grocery store. And then I know everything. That's what, people trade anecdotes all the time because they heard one person, two people, four people at a party say it. At the Fed, the regional Fed presidents in particular, I think it's one of the big benefits of having a regional Fed. When the folks who set this up set it up, I think they thought this would happen, and it does happen, is the regional Fed presidents and the entire regional Fed teams, we're in our districts collecting qualitative information by talking to many people like you, having roundtables, et cetera, but then we write it up. And so the difference in an anecdote and qualitative information is we quantify the qualitative information. If one person says it, it does not mean it's the thing we should take on as fact. But if 50 people say the same thing, well, that's an early warning sign, or some flavor that helps us, flush out what the aggregate data are telling us. And what the qualitative data are telling me are really, there's many things, but I'll tell you a few. So at the beginning of this year, I'd say most of my conversations, when I asked them, what's your biggest concern? They said recession. Then it switched to stagflation. They thought we were going to have high inflation forever, just low growth like we did before the pandemic. And now now I say, what's your biggest worry? And this is really remarkable. They said, well, I'm really worried about generative AI and how it changes my business in 10 years. I'm really worried we're not educating our population enough to keep pace with the jobs we are creating. So why am I focusing on those? Because those are longer term concerns, which means the anxiety they have about their short-term business has gone down and it's being replaced with the things that really should keep business leaders up at night, right? How is this going to transform my business? Do I have the workforce I need, not today, but 5 years from now, 10 years from now? What do I need to do in my communities to ensure that we're durable? So that has been a sea change. And then when you drill down, like with commercial real estate leaders, of course, they're thinking hard about, okay, I've got this property. What's the future? But their attitude, it was really interesting across the board. It doesn't matter what position they're holding, is they say there are going to be losses, but there are going to be opportunities. And what I'm trying to do in my business when I went around to each of them is say, I'm trying to minimize the losses and maximize my ability to see and take the opportunities. And so I see that as a positive change in the environment we're in. And it's why, I said in the speech that the recession fears are being replaced by soft landing. Soft landing is, just in their description, something that happens that doesn't break the economy and bring all their attention to how do I manage through a significant downturn. And I am not seeing that when I take the temperature on that. I'm seeing instead they're talking about these longer term issues that they're grappling with.
Does that mean that they're hoarding labor, reluctant to cut jobs, because they do have this expectation that even if there is some sort of slowdown, there is going to be a brighter future ahead with not as many qualified employees available to do the jobs that need to get done?
So I have the benefit of having done this work for a while. I was at the Fed long before I became the president, and I've been a labor economist my whole career. So I would like to broaden that part out just a tad. So it is very common when employers go through big shocks that carries over into their behavior. So let's go to the fact that in the financial crisis, employers had to cut nominal wages. They hate cutting nominal wages. Because it demoralizes employees, et cetera. So that had a long tail. They had to fire a lot of workers, right? They had to let go. And for a lot of employers, if you're not the very largest employers in our country, you're letting go of people each and every member of your team, and you had to let those workers go. And then you had to cut nominal wages. It's extremely painful. So then they hired extraordinarily slowly and kept working people overtime and other things just so they didn't have to be in a situation where they would have to let go of workers should another shock come. So now what I'm seeing is the opposite of this. In the pandemic, people lost workers because they were afraid to come to work, or they decided to take early retirement, or they moved away. And so now employers are like, oh gosh, I better keep people. So I think we have to put certain amount of this behavior we're seeing to that. But the other part is, and this is another benefit of doing this for a while, I think, is another part is that the way it works in most cycles is that the very first thing that happens is hiring slows. The second thing that happens is layoffs occur. You don't have a lot of firms laying people off before they slowed their hiring. So when I'm looking at metrics for what I think is happening to the labor market, I'm looking at hiring statistics, job filling rates. You might have postings out there, but you're not filling. And what I'm seeing is a general slowdown, but not a cliff. But obviously, if there was a significant downturn, then businesses have to resize. But we're not seeing that yet. Even the layoffs we've seen have come in the tech sector, where they got a little bit ahead of themselves on growth and then had to rebalance their workforce to meet the actual growth they were going to have. So I don't see anything out there that is ringing an alarm bell about the workforce. And people say labor hoarding. I kind of think of it as we're just always fighting the last war. And you fight the last war of, we had to lay off a lot of people. You don't want anybody new. You fight the last war of, oh my gosh, I lost a lot of people. You hang on tight. We're also in a very tight labor market from the employer's perspective. You know, it's loosening, but from an employer's perspective, they still have to spend a lot of their time finding workers to replace workers who leave, or if they want to open a new slot, that's expensive. So they definitely want to hang on to as many people as possible.
I have to open it up to questions in a second, but I do want to just ask you this before I do that. What do you think right now is the biggest misconception about the Fed and how they're operating policy?
Well, I don't know if it's the biggest misconception. I would love to hear what you all think the biggest conception is, so that I could, tell you whether it's an actual misconception or true. But I think one thing that I've seen people say is, and it's just interesting. So we always have vigorous debates. That's what you should expect from us, that we vigorously debate and discuss. People are we all come from different backgrounds. We use different lenses. We have different information. We talk to different people. We have different research teams. So of course, we're all bringing it in, but we're all working towards the same goal, which is what's the best policy we can make today that will serve the goals of achieving price stability and full employment. That's what we're doing. When we were in the pandemic, if you look at the dot plots and things, it looked like there was a ton of agreement. Well, of course there's a ton of agreement in the dots, but that is not because we suddenly started debating and suddenly started disagreeing with one another. It's because the situations around us changed, and we've always debated and discussed and things like that. But now the policy projections change because people have a different projection about how they see the economy unfolding. And yet we all come together 8 times a year and make a policy decision. And I see that as the real strength of the FOMC. It's one of the reasons I've worked at the Fed as long as I have, is because when you close that door to the meeting, there's no politics, there's no ego, there's just, hey, let's try to figure out what we're going to do that's best for the American people, and how do we do this well, and how do we stay vigilant and agile.
All right, that was Bloomberg's own Lisa Abramowitz speaking with San Francisco Fed President Mary Daly and at the Economic Club of New York. So a wide-ranging discussion, but let's be clear here. This is a Federal Reserve that's been very consistent in its messaging. That is, they are they're fighting inflation, and they will keep rates to a level that they feel like they need to do to fight inflation. And so now looks like the discussion in the marketplace has said, okay, we are higher, and we're going to stay higher for a while. And the question is, how much higher? And that's kind of where we are in the marketplace. So it's good to hear from Mary Daly. Lisa Abramowitz doing a great job, as always. Let's take the discussion of interest rates over to the world of real estate. We can do that with Selma Hepp, Chief Economist at CoreLogic. She can talk about the Fed, the rates, and the real estate market in general. Selma, thanks so much for joining us. I just popped up on the Bloomberg terminal the bank rate 30-year fixed mortgage, 7.88%. Wow, what does that mean for the residential real estate market?
Yeah, I mean, unfortunately, housing market is really in a low. We're sitting on a bottom in many ways. When you look at home sales activity, we're at the lowest that we've been since at least going back to year 2000. And what's even more sad is that we are lower than we were coming out of the Great Recession for the housing market. And that was a really low period for the housing market. In terms of mortgage activity too, we are at some 40-year low. So we're really sitting at this bottom right now, trying to figure our way out. At least now, in terms of home sales activity, what seems to be a little bit of a saving grace is that we do have a little bit more of cash sales going on. So cash share has been on a rise, and that's a function of baby boomers having more equity in their homes, and also to some extent more investors in the market, particularly smaller investors in the market. Also, international buyers seem to be back, so that's helping market a little bit, but nothing to rave about at this point.
Yeah. I guess we go back and look at the last 30, 40, 50 years. A 7% mortgage market is not the craziest thing. We've seen that many, many times. But I guess the question here, the issue here for a lot of folks is, boy, we moved up in mortgage rates from the really, really quickly, more than doubling, in the space of a year. That shock presumably will take some time for, kind of the market to absorb, I guess.
Yeah, absolutely. I think really for a lot of buyers, it is the shock. I mean, affordability, like I said, is at 40-year low, but there are buyers out there, and there are buyers now even at the 8% rate, first-time buyers, for example. So there are folks out there, they're very interesting, but, something we talked a lot about before is lack of inventory. So it's not even just the rates at this point, but, high rates are locking in potential sellers. Inventory is at the lowest level we've seen historically. So really, it's a quagmire. We're just, there's nothing. It's something, at least we need to see a lower mortgage rate at some point for something to change.
So, I kind of feel like the next issue that somebody has to get a handle on is, what is the rate, or is there a rate that kind of frees up the market, clears out the market, that would make, a would-be seller say, okay, yes, I'm getting out of my 3 or 4% mortgage, but the rates are, 5% or 6%, so it's not that bad. Do you guys in the industry have a feeling like where interest rates have to go down to before we start to see some of these sellers come back into the market?
Yeah, I think if we get back to about 6%, slightly below 6%, I mean, that 5 handle is very magical in many ways. But even at 6%, I mean, if you recall earlier this year when mortgage rates came down to 6.2, 6.3, we had quite a bit of activity in the market, and even more, and even inventory was picking up to some extent at that point. At this point, we're just seeing nothing, So I think it would really help to get rates down to 6%.
Because I guess one of the questions is the new housing market. Give us just a sense of what percent, like how big is the new housing market? Can that deal with some of the demand out there? Where are we, like, new housing as a percentage of total housing in terms of supply?
Right. I mean, it has been increasing, especially now as existing home sales are frozen and inventory is frozen. So new home sales as a share of total sales have been on a rise. Historically, I think we've seen about 11% of sales being new home sales. Now we are closer to 15, 16% of home sales, new home sales contributing to overall sales activity. Now, the issue too at this point is that, with mortgage rates approaching 8%, now that's freezing new home market as well. And on the other hand, new home sales are really concentrated in parts of the country where the inventory issues are not as large. So, it's the other parts of the country that continue to suffer as a result of low inventory and higher mortgage rates.
Yeah, because it seems like here in the greater metro area during the pandemic, we had a great exodus of people for, states like Texas and Florida and some of the other maybe Sunbelt states. Is the supply-demand imbalance even more pronounced in some of those faster growth market, or are the new home builders kind of they're there meeting that demand?
Well, I think they're ramping up. I'm not sure that they're necessarily meeting demand, just simply given how many people are moving to those areas. But they're ramping up, and they are, trying to. And one thing to keep in mind is that it's less restrictive to build in those areas and less costly. So they are, in a sense, providing that more affordable inventory, smaller homes, and all these features that the incoming buyers are looking for. So that is helping the market. But again, I think overall, we're still severely undersupplied. If you look at the existing homes for sale, right? For example, we are now at about 1 million, it depends on a month, but to get in a more balanced market, we would need at least double that, at least 1.8 million.
Wow.
Same thing for new home sales. I mean, new home sales are now below about 700,000, I want to say. We would need to at least increase that by 50% to get some relief in terms of pressure on home prices and overall affordability and just better balanced housing market.
All right, Selma, let's say I'm able to stomach the 7 to 8% 30-year fixed mortgage. If I go into my bank or my mortgage broker, can I get a loan here? Can I get a mortgage?
Well, I think so. I mean, I think the lenders are really trying to get buyers in at this point, given just how many have fallen out with higher mortgage rates. It sounds like qualifying incomes are now an issue because of debt to income ratio, given how much higher the mortgage rates are. But I mean, lenders are being innovative. They're trying to find ways to qualify folks. And for example, in the new home market, there's still a lot of home builders and developers that are offering mortgage rate buy down programs, which is helping with that affordability, at least in first couple of years of home ownership.
All right, Selma, so I guess talk to us about the rental market then. If I decide, oh, gee, I can't really stomach a 7 or 8% mortgage, I got to continue to rent or go out and rent versus buy. What do we see in the rental market?
Right. I mean, there's two different stories in the rental market. There's a single-family rental market and there's a multifamily rental market. And we've seen quite a bit of new construction going on in multifamily, on the multifamily side, which is putting pressure lower on rent increases. And in some markets, we have now at this point seen decline in rents, especially in these markets that were really high growth, high rent growth during the pandemic. Think of Austin, Phoenix, Vegas. These really, Miami, for example, these really high growth markets during the pandemic. But on a single family side, we are seeing rents plateau, rent growth at least plateau. And actually the markets where we are seeing a lot of increases in rent or relatively higher increase in rent growth are these Midwest, more affordable, sort of easy as it goes kind of markets. St. Louis, for example, tops our list, so it's different dynamics going on, but people definitely who cannot afford are pivoting to single-family rental markets.
Hey, Selma, thanks so much for joining us. Really appreciate it. Selma Hepp, Chief Economist at CoreLogic, talking about the real estate business in a world of higher interest rates. Again, the 30-year fixed mortgage, according to Bankrate.com, 7.88%. How about that? I feel pretty good with my 6% mortgage I got just 7 months ago. S&P 500. 0.6%, about the same for NASDAQ, so a little bit of a sell-off there. We've got yields. I got the yield down just slightly for the 10-year, 4.72% on the 2-year, down about 3.5 basis points, 5.01%, so just holding above that 5% level here. And looking at the Bloomberg Dollar Index, off just slightly here today. And then, of course, the story we've been following just in the commodity space has been WTI crude oil off another 1.6% today, now at $82.85 per barrel. Brent, that's off about 1.7%, $84.34 there. So we will keep up with that. But again, big movements down in oil just in the last couple of days on some supply concerns. Sound On with Joe Matthew from Washington, D.C. He's got it all. That starts right now.
From our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of the new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Day 3 with no permanent Speaker of the House and 43 days to a possible government shutdown. Welcome to the fastest show in politics as the race for Speaker gets underway in earnest. But the debate over funding the government is on ice because of all of this. We're joined ahead by Congressman Brad Sherman. The Democrat from California serves on financial services as well as the Foreign Affairs Committees. And join those voting to remove Kevin McCarthy this week. He'll be with us in just a moment. New fundraising numbers out from the Republican campaign trail. Donald Trump outraising Ron DeSantis by threefold. And some members of the RNC are now questioning whether to have any more debates at all. We'll talk about it all with our panel. Bloomberg Politics contributor, Republican strategist Rick Davis, joined today by Democratic analyst Alvin Jordan from Rock Solutions. It's all after a look at Wall Street. Let's get a brief update on trading now from Steve Rappaport. Hey, Steve.
Hey, Joe. We are red for the big three on Wall Street. The S&P 500 down less than 1%. Dow Jones down less than 0.5%. And the NASDAQ, red as well, down less than 1%. Stocks are slipping as traders mull whether or not the labor market remains too hot for the Federal Reserve to hold on raising interest rates next month. The Labor Department reports first-time weekly jobless claims were up slightly at 207,000, but they remain at historically low levels. Two-year yield, 5.01%. The 10-year, 4.71%. COMEX gold, $1,831.40. NYMEX crude, we have that at $82.72 a barrel. That is down more than 1.75%. We check the markets all day here at Bloomberg. I'm Steve Rappaport. Back to you, Joe.
All right, Steve, thank you and welcome to the Thursday edition of Bloomberg Sound On. Little Friday, as we call it around here, and not a lot has changed from this time yesterday as we consider the lack of motion on Capitol Hill when it comes to not only funding our government, but finding another Speaker of the House. As we prepare to talk this out with Brad Sherman, we actually heard some advice from the other chamber. Republican leader Mitch McConnell loathed to give advice to Kevin McCarthy, at least publicly during his tenure as Speaker, and he clearly does not want to see this again.
I have no advice to give to House Republicans except one. I hope whoever the next Speaker is gets rid of the motion to vacate. I think it makes the Speaker's job impossible, and the American people expect us to have a functioning government.
Get rid of the motion to vacate. That's where we begin our conversation with Congressman Brad Sherman. He's with us, of course, the Democrat from California, back on Bloomberg. It's good to see you, sir, and I appreciate your time. I'd like to ask you about this entire process, but I wonder if you agree with Mitch McConnell. You weighed in back in January in the Speaker's fight, saying at some point here Republicans need to work with Democrats. Can they do that while there's still a motion to vacate?
They will try to perhaps change the rules to get rid of the motion to vacate. I doubt Democrats will help them do that. When we take the majority in 2024, I'm sure we will not have a motion to vacate. But if they're going to ask us to help them change the rules, we've got a lot of rules that we think we ought to change.
Well, there we go. So let's get into this just a little bit here. I wonder your thoughts, first of all, on Republicans blaming Democrats for firing Kevin McCarthy. That's the narrative that we've been hearing from a lot of GOP lawmakers, Congressman. You voted to oust Kevin McCarthy.
Every Democrat voted to vacate the chair. We don't think that Kevin McCarthy is a good speaker. We think Hakeem Jeffries would be an excellent speaker. If we can't get him installed this year, we've got next year.
What do you think is going to happen next week? And I know that you're looking at this from the Democratic side of the aisle, and nobody's consulting you right now on Jim Jordan versus Steve Scalise, but you know these individuals.
I wouldn't be surprised if it ends up being Scalise in the number one position and Jordan in the number two position. I also wouldn't be surprised if we have continuing chaos. But I think their craziest members may have gotten their pound of flesh. They may have and may be willing to abide by the tradition, which is if your caucus selects a leader, you vote for that leader for Speaker of the House. But if even 5 of their members don't decide to go along with that tradition, we voted for Hakeem Jeffries 15 times last roll call back in January, and we're ready to do it again 15 times or 115 times.
And you'll be voting for Hakeem Jeffries.
115 times.
According to many, has been very disruptive and will be to the process of funding the government. Congressman, are you bracing for a shutdown on November 17th?
Absolutely. I mean, even if McCarthy had gotten what he wanted was to pass a resolution, as crazy as people wouldn't vote for, that slashed food for pregnant women and infants, that slashed federal aid to education around the country. That was what he wanted. Now, you can imagine the Democrats in the Senate aren't going to take that up. So I would suspect that we're going to have some very tough negotiations. And the question will be whether any compromise is one, A, that a new Republican speaker is willing to accept, and B, maybe they move to vacate the chair at their extremes, because I can be sure nothing that can pass the Senate is going to get Gates to vote for it. So the only way to keep the government open is to have a speaker who's willing to put on the floor a bill that Gates won't vote for.
Congressman, I want to ask you about the economy and the trajectory of interest rates from your perch on the Financial Services Committee. This is something we've discussed before, of course. The battle against inflation, we're hearing higher for longer. And we spoke today on Bloomberg with Mary Daly, the San Francisco Fed president. Here's what she said.
My job as I see it, our job as I see it, is not to tighten, just do our part. It's to watch financial conditions, because monetary policy works. We raise the funds rate and it moves through all the other interest rates. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Where do you think we're going with this, Congressman? Higher for longer is the narrative right now, but we've seen this change on a dime depending on the trajectory of the economy. Tomorrow we're going to get jobs numbers. Will that be another inflection point?
It'll be another one. If I knew where interest rates were going, I wouldn't be on this TV show with you. I'd be on the phone with my broker. But I would say that the recent decline in oil prices will certainly help control inflation. Oil is not only what we pay at the pump, but it's based into the transportation cost of everything you buy. So I'm hoping that we can get inflation controlled without going higher for longer, but we'll see.
You think the Fed should hike again or start preparing for rate cuts? I think you've been pretty consistent on this, but the data prices have been stubborn.
I think they have to be data driven. I have argued for a 2.3% target rather than a 2% target, but whichever target you have, it's still above that number. And it is so hard to manage the economy using interest rates when their main effect is months after you make the decision. It would be like driving a car where when you turn the wheel, you go half a mile before the effect of that.
I can't talk to you without bringing up your favorite topic, which of course is crypto. And we're watching the trial of Sam Bankman-Fried unfold here. You wrote on Twitter, crypto bros will say SBF was one snake in a crypto Garden of Eden. In truth, though, crypto, you say, is a garden of snakes. You go on to write, while his ghost still roams the halls of Congress today, he faces justice. How is his ghost still alive in Congress? Are you referring to donations that have gone unreturned?
More his advocacy for bills that would get the SEC out of the crypto world and provide only a patina of regulation through the CFTC. His goal, his reason for being here in this very building, the Rayburn building, was to try to get the SEC out of crypto. And that in itself tells you we got to get the SEC more into crypto. This is a currency that has no advantage over the dollar, except in its name. It is literally hidden money. And when you see a New Jersey senator with gold bars and huge amounts of cash, you realize just how more efficient that would be in a crypto world where you don't need cash, you don't need gold bars, you just have secret accounts and unhosted wallets.
I understand there's an eviction underway in the Capitol, Congressman. I wonder your thoughts on Nancy Pelosi and Steny Hoyer losing their hideaway space. One of the first actions, if not the first, taken by the new acting speaker, Patrick McHenry.
I think this is an incredibly petty move. It has no political benefit except within the Republican caucus, where they can say, look, we just smacked down two Democratic leaders, and maybe that will make them feel good enough to unite behind a new speaker. But it's a really bad face for the Republican Party.
Thanks for being back with us, Brad Sherman, Congressman from California, here on Bloomberg Sound On. I'm Joe Matthew in Washington as we assemble our panel. Rick Davis is back with us today. Bloomberg Politics contributor, of course, and Republican strategist, joined as well by Alvin Jordan, Vice President, Rock Solutions, Democratic analyst. Good to see both of you here. I wonder if you agree, Alvin, this idea of kicking Nancy Pelosi out of her quarters here, her hideaway, as they call in the Capitol building, typically an honor reserved for a former speaker. Is this just the way the game is played now?
I agree. We've reached the point of, petty politics in that way. But if the long-term goal is to, kind of consolidate and bring, the Republicans closer together, the hope would have to be, beyond the pettiness, that this is something that will at least, start to align and combine forces in a way. So petty for sure. But if the long-term goal is constructive, I think given all that we've seen, this is par for the course.
Rick Davis, what do you think about the latest here? Are you surprised no new names have emerged, that Republicans are, in fact, it appears, coalescing around a race between Steve Scalise and Jim Jordan for Speaker?
Yeah, I'm not surprised that other names have not emerged. I think that the two of them moved quickly and decisively into the vacuum that was created by the former Speaker McCarthy's ouster. So if they had waited for the end of the week, let's say, to make this announcement, you might have seen other people testing the water. But their teams got out quick, started calling members and rounding up support. So I think most people look at this and say, the question isn't like, can we accommodate other candidates in the field? I think the real question is if they can't get to 218 before the vote is taken, then maybe somebody else gets elevated to a compromise candidate of some kind. But we're going to see how these two battle it out and see whether or not they can get to the magic number.
Aides to Kevin McCarthy are calling lawmakers on Jim Jordan's behalf, Alvin. Is that a help or a hindrance after what just happened?
I think it's all a hindrance at this point. To be completely honest and on some level, I think fair, the House Republicans at this point have shown that they are in complete disarray and don't have a real vision or path forward. And so, honestly, I think we're getting to the point of I'd like to see a new speaker altogether. I don't think it would be an issue if we saw, say, a King Jeffries take over as the speaker role, just because I don't know how much faith Americans can actually have that any of this back and forth is productive in that way.
Rick, you know how to spread the word on Capitol Hill. You know how to whip votes. You know how to get support for something that a lawmaker is pushing. What's going to happen behind the scenes then? Most lawmakers are out of town over the next several days, because on Monday it's going to be go time, where these candidates are actually starting to pitch their colleagues with formal final arguments before an election day.
Yeah, it's a combination of geographic outreach. We know that both Scalise and Jeffries made presentations to the Texas delegation, 25 Republican members strong, doing the same thing with other delegations that have high concentration of Republican members. But then they're also cross-pressuring the five families, the Republican Study Commission, the Freedom Caucus, the Problem Solver. I mean, there's a whole outreach campaign going on with these folks on an ideological basis, which is interesting because neither one of these candidates, Scalise or Jordan, are known to be real, players in any of these organizations, right? And so a lot of it is deal making amongst the five families, who can get consolidation of votes, right? You can't do it one by one; it's just too big a problem. But there are some influential members, like Kevin McCarthy, who is the only one who could garner 210 votes. Couldn't get to 218, but he could get to 210. And so having him call actually is, I think, a big advantage, because there are a lot of people who wish he was still speaker and frankly wish he would run again. And maybe that's one of the scenarios, is that neither one of these guys can get to that magic number, maybe he re-enters the race. Who knows? I don't think anybody knows how this is going to turn out yet.
That's why it's remarkable. And I'm holding out for that to happen, Alvin. I don't know about you. I know you're a Democrat looking across the aisle, but if neither Scalise or Jordan get to 218, we go another 15 rounds. Let's say it's next Friday. Kevin McCarthy's sitting there with his arms folded, smirking. Then what?
I mean, on the one hand, I have to say, like, kudos for him to be in a position to where we could even look over at him to see the smirk, right? But yeah. I don't know that, given what we've seen, that's the healthiest path forward, even if it's a viable one. I think we're at a place truly where we got to, figure out a path to get someone that can, again, taking a step back, someone that can give confidence that the government and the country is headed in the right direction.
Right. Rick Davis and Alvin Jordan, our great panel today as we come back to consider the rules. Is Mitch McConnell right? Does the motion to vacate need to go away to save the House? That's next on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. I'm Steve Rappaport. We check the markets all day long here at Bloomberg. We are red on the big three for Wall Street. The S&P 500 down less than 1%. Dow Jones off less than 0.5%. And the NASDAQ also falling, but that is less than 1% as well. Stocks are slipping as investors worry whether the labor market is too hot for the Federal Reserve to forego raising interest rates next month. First-time jobless claims climbed to 207,000 last week, higher than expected, but still at lower levels, historically low levels. And more than 47,000 jobs were slashed last month, according to a report from Challenger, Gray, and Christmas. The Labor Department releases the September morning jobs report. That's tomorrow morning, right here, 8:30 a.m. Wall Street time on Bloomberg. Two-year yield, 5.01%. The 10-year, 4.71. COMEX gold, $1,831.40. NYMEX crude trading at $82.58 per barrel. And that's a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Will Donald Trump save Republicans in the House? This is a real question, as The Messenger now reports that the former president may visit House Republicans as the speaker race heats up. They say he's intrigued about the idea of being temporary speaker. We told you that yesterday. He was asked about it in the courthouse in New York. Remember this?
Would you be speaker, Mr. President? A lot of people have been calling me about speaker. All I can say is we'll do whatever is best for the country and for the Republican Party.
Would you take the job? Would you take the job?
We have some great people.
Would you take the job?
A lot of people have asked me about it. I'm focused. You know, we're leading. I don't know you. I'm sure you don't read too much in the papers. But we're leading by like 50 points for president. You know, my focus is totally on that. If I can help them during the process, I would do it. But we have some great people in the Republican Party that could do a great job as speaker.
A lot of people are asking about it. Let's reassemble the panel. Rick Davis and Alvin Jordan are with us. Rick, what do you think? Donald Trump swoops in. You can imagine his view on all this, right? Temp speaker in the rostrum, drop the gavel a couple times, then you move on to being president. You own Washington. Is this actually going to happen?
Well, it certainly goes with the master brand magician that he is to constantly resurrect himself. And I got to admit, I mean, it would be one of the great moves of all time politically. I doubt if the House Republicans need that level of, I would say, division within their ranks at this stage. I know many of the members I've talked to are hopeful that going through this process will actually help unite them as a caucus. I think that's a wish that will likely not come true. But having Donald Trump at the helm during an election process, wow, that would be highly entertaining. I'd love to see it. Go ahead, guys. Bring him in. As if he hasn't got enough to do, like run for president or stay out of jail, right? I mean, now. So, yeah, I mean, if we're going to make a mockery of the democratic process, let's get started and go big.
Well, as we learned, there'd have to be a rule change because at the moment you cannot be indicted and be speaker. But as I read in the Messenger, Alvin, he's deeply attracted to the idea, and his phone is blowing up with Republicans urging him to go to Washington. Is this a Democratic dream come true?
You can call me. I'll just say, like, I mean, to even hear the lead-in of, you know, all of this coming live from the courthouse as we await a litany and a long laundry list of indictments, it really is a joke. And if the goal truly is to, again, make a joke of American democracy, then absolutely. I said, let's go for it. We can sell pay-per-view and get our, you know, subscribers up as a country, because at that point it would be complete and utter comedy, to be honest. No, we can't do it. We shouldn't even entertain it. The fact that it is being entertained, I think, is just, in this case, you know, just more ammunition for Democrats for sure.
Well, they say C-SPAN's the original reality TV, right? The source tells the Messenger that Trump is entertaining, becoming speaker on an interim basis for a few months. I don't know how he would work all of that into Rick's point, but I also wonder what Mitch McConnell would think about that. Not a big Donald Trump fan, if you want to consider actual gridlock. But I wonder both of your thoughts on Mitch McConnell's advice, a rare bit of advice from the Republican leader in the Senate for whoever next holds the gavel. Here's what he said.
I have no advice to give to House Republicans except one. I hope whoever the next speaker is gets rid of the motion to vacate. I think it makes the speaker's job impossible. And the American people expect us to have a functioning government.
I suspect you agree with that, Rick, but would that be possible with the scenario we have here and how difficult it will be clearly for anyone to reach 218?
Yeah, look, I can see the scenario where they make a change. Republicans realize, Joe, that this isn't helping them, right? There are, other than 8 members, there are no other Republicans in the House of Representatives who think this has been a good week, and that they're actually getting the job done for the American people by actually not being able to do their job because they don't have a speaker. So if you go with the president that they all see this as a wake-up call, then in the process of anointing someone, the next speaker, in that caucus, which is where you're going to get those 218 votes, I can see a open conversation about the fact that we need to make a change so that the next speaker doesn't get put through the ringer the way Kevin McCarthy was put through it by a very small minority of Republicans. And I would say they've lost a lot of credibility by taking down the speaker and throwing this House into disarray. So maybe they're on the defense enough to be willing to make that change.
This goes back to 2018. Nancy Pelosi, Alvin, where are Democrats on the motion to vacate? And as Mitch McConnell said, getting rid of it.
Again, who knew that Mitch McConnell being the voice of reason was on the bingo card for 2023? I surely did not. But I will say I have to agree with him. It's the same as if I desire to watch the television in my house and I swap batteries from a different appliance. I can't be surprised when the old batteries fail and I'm no longer able to use my functioning equipment. It's the same in this case. Like no one can truly be looked to do their job if they're hand is tied behind their back. And so I agree. I think at some point have to make a concession because otherwise we'll be right back where we are today. And I don't think anyone wants that.
Of course, whatever happens with government funding, a lot of it is going to hinge on the debate over border security. That's what brought us to the brink of a shutdown just a week ago, and we're certainly not done with this yet. And there's news on this today, and it might not be one you would expect. The headline on the terminal, Biden says he tried to stop plans to add to Trump's border wall. We just heard from the president in the Oval Office on this. You guys may have seen the news here. That the White House, the administration, has announced plans to add roughly 17 miles along the Rio Grande in Texas, the Trump border wall that Joe Biden at one time said would not happen. In fact, here's what he said to NPR about this.
No, there will not be another foot of wall constructed on my administration.
Not another foot. Fast forward to today in the Oval Office. He took one question after a brief photo opportunity.
I'll answer one question on the border wall. The border wall, the money was appropriated for the border wall. I tried to get them to reappropriate, to redirect that money. They didn't. They wouldn't. And in the meantime, there's nothing under the law other than they have to use the money for what was appropriated. I can't stop that.
Do you believe the border wall works?
No.
Doesn't believe it works, but we're adding 17 miles. Rick, you're more familiar with the appropriations process than most Americans. There's not much he can do here, but it's not a good look, is it?
No, but the entire mess on the border is not a good look. I'd say this is a component of that. It brings it up so that he had to deal with it today. But the reality is he needs comprehensive. Who has a chance to do something about it between now and Election Day. And the idea that you just shirk it back and say, no, I don't agree with what Congress appropriated, or I don't think you can do anything in election year is a cop-out. Do something about immigration. It's hurting our country.
Alvin Jordan, does the president need to come up with a better answer than that?
I think so. What's happening right now is so reactionary that, again, it is really, if you're, the former president, Trump, what else do you need by way of talking point as to say, oh, President Biden is completing my project? But I do think it shines a light on the larger problem that we're seeing, whether it be in places like Eagle Pass, Texas, or even in New York City, there is a larger problem that needs to be addressed. And while I can understand a bit of the kind of spot duty that the president is doing now, as we roll into election season, I would hope that his team is putting together a foolproof plan to address what is becoming one of the larger, if not largest issues kind of facing our country at this time.
Yeah, you better believe there'll be a lot more to follow on this. Alvin Jordan and Rick Davis, our panel today, as we turn next to the latest fundraising haul by Donald Trump, triple that of Ron DeSantis. We'll take a look at the numbers on the GOP trail after we get an update on world and national news from Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. Well, the Biden administration does plan to construct roughly 17 miles of border barriers along the Rio Grande in Texas. That is one of the busiest spots for migrants coming from Mexico. The Department of Homeland Security says it will waive environmental and tribal land protections to speed up construction. Bloomberg's Ryan Tig Beckwith says it's a major reversal for President Biden, who vowed not to build 1 foot of a border wall.
Ultimately, the problem is there's just a whole lot of people who want to come right now. And there's not a lot that you can do to deter them because the conditions where they're leaving are horrific. And however horrific you try to make it here to cross that border, it's never going to be as bad as what they're facing.
Bloomberg's Ryan Tig Beckwith reporting from Washington. The move comes as Republican lawmakers demand stricter security measures as a condition of funding the government. Well, there's more evidence women are seeing some barriers in the way of promotions. Bloomberg's Karen Moscow has more.
A new report by Sheryl Sandberg's leanin.org and McKinsey shows for every 100 men promoted to a manager role in 2022, only 87 women received the same boost. That was up from 86 women in 2021. One reason for the gap, according to Sandberg, is men are promoted based on their potential, while women have to have already proven themselves as managers. The numbers were even worse for Black women, who were promoted at the lowest rate in at least 5 years compared with men. Karen Moscow, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. I'm Steve Rappaport. We check the markets all day long at Bloomberg, starting with the big three on Wall Street, the major indexes gaining a tiny bit, but still in the red zone. The S&P 500 down less than 0.5%. The Dow Jones down less than 0.25%. NASDAQ off by less than 0.5%. So investors are concerned that a too-hot job market will spur another interest rate hike by the Federal Reserve. Federal Reserve Bank of San Francisco President Mary Daly says doesn't have to be that way.
My job as I see it, our job as I see it, is not to tighten, just do our part. It's to watch financial conditions, because monetary policy works. We raise the funds rate and it moves through all the other interest rates. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Daly spoke earlier with Bloomberg's Lisa Abramowitz. Two-year yield, 5.03%. The 10-year at 4.72%. COMEX gold, $1,832.20 an ounce. NYMEX crude trading at $82.82 a barrel. That is down less than 1.75%. Shares of Clorox hit their lowest level in more than a year after the company detailed the impact from a cyber attack in August. Clorox says the breach halted production at U.S. factories and prompted significant product shortages that put pressure on sales and profit in the third quarter. Right now, Clorox stock down more than 6.5%. And that's a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Is there any point in calling Ron DeSantis the second place candidate any longer? It's not just the polls, it's the money. As the Trump campaign and the DeSantis campaign report fundraising from the last quarter, and there's really no comparison, Donald Trump, and this is according to the campaign, raised more than $45.5 million in the last quarter, triple what Ron DeSantis is putting up here at $15 million, and that's down from 20 in the second quarter. So fundraising and polling numbers are declining for Ron DeSantis. By the way, $3 million of that 45 was from the mugshot. We finally can put a number on this. $3 million from T-shirts, coffee mugs, posters of the menacing mugshot from Georgia. Money in the bank, also no comparison. Donald Trump, 37.5, DeSantis, 5. As we reassemble our panel for their take, and new polling numbers out today that we'll touch on as well with Rick Davis and Alvin Jordan. Rick Davis, Republican strategist, of course, Bloomberg Politics contributor. Alvin is a Democratic analyst with us from Rock Solutions. Great to have you both here. Your thought on the fundraising here, Rick. RNC members are apparently questioning whether to even continue debates. How would you describe the state of this race?
Well, first of all, I mean, the ever-shrinking Ron DeSantis campaign shrinks a little bit more. Not only has his polling been shrinking, but, last quarter he raised 20 million. This quarter he raised 15. Next quarter, what is it going to be, 10? It's not a great trajectory to be on if you're trying to surmount a really, what seems like today, unsurmountable lead by Donald Trump. And the fact that he spent $10 million trying to, get to where he is, Ron DeSantis, you might want to rethink your spending strategy, because every dollar you're putting in, you're going down. I mean, it's not a good place to be. I've been there. It's not a good place to be. And it'll be interesting to see how the rest of the field does. The reality is that I'm kind of curious whether or not Nikki Haley has been able to convert a couple of good debate performances into more cash, which she desperately needs to also wage a campaign against Donald Trump. So this is a very important report, and I think one that'll tell us a lot about the state of the race, not just the polling data.
Interesting you mentioned Nikki Haley. She comes in second in the most recent USA Today Suffolk poll in New Hampshire. Trump 49, Haley 19. It's down to 10 for Ron DeSantis in that same poll. Marquette is out today as well. This a national poll. Trump 56, DeSantis 12, Haley 6. What do you make of this, Alvin, specifically when it comes to the money? Is this conversation over, or is New Hampshire going to bring a surprise in Nikki Haley?
Well, I've used succession references here on Bloomberg programming before, and I'll use another one from Logan Roy now, which is money wins. And in America, that is, doubly true. And so I think it is exactly what it shows us, which is this is a demoralizing report if you're Governor DeSantis or Nikki Haley in this way, because you truly are, facing what seems like an insurmountable kind of, climb up the mountain in that way. And I think as the money becomes clearer, a mugshot, it even outpaces what it seems like would be, kind of record months and quarters for the others. Again, I think we talked about this when the last debate was looming, which was it truly, seemed like it was a race for a second. And now we're learning that a race for second truly means, paces and paces behind former President Trump in that way. And so I think you have to truly, at this point, not only relook at the spending that you've done up into now, but also just truly, have those realistic conversations with your team to see if it's even possible to close the gap at all, which in my opinion, I think is close to impossible at this point.
Close to impossible. Rick, talk to us about the debates here. Next one is November 8th in Miami. They're begging Trump to show up. He won't. And now Politico's up with a story today saying that actual members of the RNC are questioning whether to continue in this format or at all, because it's starting to embarrass the candidates and the parties. Are we going to do all of these still?
Yeah, look, part of it, you got to put on the candidates. Like the last debate was boring. A bunch of guys and gals snapping at each other. No real focus on the front runner. Nobody really answered a lot of, inspirational, questions weren't answered in an inspirational fashion. It was just kind of junk TV. And yeah, if that's what you're going to get, then you ought to quit doing it, because it's not helping the Republican brand and it's not helping any of these candidates. The reality is I don't see the RNC putting any pressure on Donald Trump to join these debates when they put enormous pressure on everybody to qualify to be in these debates. So what bargain are you getting for playing by the RNC rules? None. So look, I think the RNC has really botched this. They look like, they were setting up this thing for like, oh, we're going to winnow the field really quickly. And it turns out that the field is not even participating in the debate. And everybody else on the fringes are like, making it all look bad. So I think the RNC chairman needs to sit down and say, what am I doing to the party here? And change the whole format of these things, or just quit having them.
What if this was the DNC? Alvin, I realize it's not, but I'm just curious your view on this as a matter of principle. A party in a situation like this, a bunch of scheduled debates, a field of candidates, what would you suggest?
I think you have to find a way to get what seems your very clear, front runner in former President Trump involved. Whether that is, him doing separate interviews with Tucker Carlson or just his kind of post-trial interviews or press conferences, if you will. I think these are definitely eclipsing the efforts that they're trying to do in the conversation about money, wasting it essentially. So I think they have to have that real conversation with themselves as a committee and a collective, and try to make sure that if the candidate is clear that they're putting their resources behind he or she, in this case, the former president. But I don't think that they can continue, regardless of whether it was the DNC or not, to move forward with a pace that is not benefiting them in any way.
That is absolutely incredible. Does it even matter? Does Trump counter-program these? Again, Rick, we only have 30 seconds, or does he just kind of ignore it like everybody else?
No, he'll counter-program it. He loves to sort of poke fun at these guys. So, yeah, I can't wait to see where he shows up next debate.
Me too. November 8th. I can't imagine. I guess he'll be nearby. They'll all be in Florida, by God. I'm Joe Matthew in Washington. With our panel today, Rick Davis and Alvin Jordan on the fastest show in politics. We're live from Washington. As we turn to Rudy Giuliani, some final thoughts from our panel. Yeah, Rudy is suing the president. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Steve Rappaport. ExxonMobil likely got a $2.1 billion boost to earnings from higher oil prices and refining margins in the third quarter. More from Bloomberg's Charlie Pellet.
Steve, in a filing, Exxon said rising crude prices accounted for a gain of about $1.1 billion over the previous quarter. An increase in gas prices added about $400 million to earnings, but that will be wiped out in losses in chemicals, which declined even further from already low levels. Analysts estimate Exxon's third quarter earnings will increase from the second quarter after 3 straight sequential declines, the longest stretch since the crash in oil prices between 2014 and 2016. ExxonMobil reports October 27th.
Steve? Thanks, Charlie. ExxonMobil stock is down less than 2%. Amazon is getting in on the race to space. Bloomberg's Lisa Mateo reports.
Steve, Amazon is set to launch its first 2 test satellites tomorrow in a race to build out a massive internet from space constellation to compete with SpaceX's Starlink. Amazon had hoped to have the satellites for Project Kuiper in space a year ago, but the project was delayed. The proto flight hopes to test out the company's ability to beam broadband internet from orbit. Steve?
Thanks, Lisa. Shares of Amazon are off more than 1%. And shares of Puma had their biggest intraday drop in more than 3 years after the sportswear company's comments on a call with analysts spurred worries about sales. Shares fell as much as 12% in Frankfurt. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We are live from Washington, where we'll add Kaylee Lyons to the conversation in just 5 minutes. First, we check world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Former President Trump may not be in court today for his civil fraud trial in New York, but he is still posting disparaging messages online about the judge in the case, calling him radical and highly political. That judge has already determined Trump is guilty of fraud for overvaluing his assets, and he will be the one determining damages in the case. Hofstra law professor James Sample says this case really riles Trump, who prides himself as being a successful businessman.
It does seem very possible that Donald Trump will be placed under oath on the stand in New York State trial court on the fundamental question of, are you fundamentally dishonest, and did you engage in fraud?
Sample says Trump likely considers this case more of a threat than his 4 criminal cases, since this one could really hit his pocketbook. Well, as the trial of FTX co-founder Sam Bankman-Fried continues in New York on charges of fraud, the U.S. government is already taking aim at his high-flying lifestyle.
The U.S. is going after Bankman-Fried's luxury jets. The government notified the 31-year-old yesterday it is seizing 2 private planes. Prosecutors claim they're part of the proceeds from the multi-billion-dollar fraud Bankman-Fried is accusing of pulling on crypto investors. Filings in Delaware bankruptcy court show U.S. Marshals seized 1 jet, a Bombardier Global 5000, in February. The other, an Embraer Legacy, is still being held by a charter airline in the Bahamas. That company says it bought both planes last year under a handshake deal with Bankman-Fried. In Washington, I'm Nathan Hager, Bloomberg Radio.
President Biden's dog Commander still has a biting problem. An aide to the First Lady says the 2-year-old German Shepherd is not presently at the White House following more biting incidents involving White House staff and U.S. Secret Service officers. The aide says they're continuing to, quote, work through solutions. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Joe.
All right, Nancy, thank you. Big news from Rudy Giuliani. Held a news conference yesterday in New Hampshire to announce a lawsuit against the President of the United States. The former mayor of New York is suing Joe Biden for defamation after calling him a Russian pawn during a debate that took place almost 3 years ago. That news conference in New Hampshire devolved in a conversation about Rudy Giuliani's alcohol consumption after the New York Times took a swing at him with a very tough piece, suggesting that his alcohol abuse was alienating people around him. He was not having any of it.
It's a typical New York Times malicious lie. I do not have an alcohol problem. I have never had an alcohol problem. And the reason I told you what I achieved is nobody could have achieved that if they did. When the hell was I drinking? I was working 24 hours a day. It's a big damn lie by a newspaper that's a disgrace.
Whew. Final thoughts from our panel. Rick Davis and Alvin Jordan. Rick, if you're explaining away your alcohol consumption, I'm guessing that doesn't speak well for the defamation suit against the president.
No, I mean, we've become such a litigious society that even the discussion of all these things is just wearing everybody out. And my heart goes out to Rudy for all the troubles that he has right now. And you never want to wake up in the morning and have to deny you're an alcoholic. I mean, that's just the worst day of your life up to that point in time. So I really think a lot of this stuff is just sort of just really bringing a lot of people down and adds to the general feeling amongst the public that the country is just in a mess.
What's the line, Alvin, if you're explaining you're losing?
Pretty much. Yeah, I think it is also not indicative of where we are, because if this is the worst of his problems, I think he'd be in better shape, to be honest.
Thank you both for humoring me. Alvin Jordan, Rick Davis, great conversation, great panel. You'll only hear on Sound On. I'm Joe Matthew in Washington. Hour 2 starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of a new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Donald Trump triples the haul of Ron DeSantis. Welcome to Hour 2 of Sound On as the former president puts up some monster fundraising from the last quarter amid a report that he may be coming to Washington now to address House Republicans in the throes of this speaker battle. He may even entertain the idea of being a temporary speaker himself, we read. We'll have the latest on all these stories and discuss with Eli Yoakley, political analyst at Morning Consult. We'll check in with Bloomberg Congress reporter Billy House for more on that leadership race. And as the Biden administration today announces plans to expand Donald Trump's border wall, we'll check in with Bloomberg Dallas Bureau Chief Julie Fine. It's all after a look at Wall Street. Steve Rappaport in New York has the latest on the markets. Hey, Steve.
Hi, Joe. Well, the Dow just entered positive territory, albeit briefly, and now it is flat. We have the S&P 500 down less than 0.25%. Same thing for the NASDAQ. Stocks are dropping as investors are concerned that the labor market might be too hot for the Federal Reserve to forego raising interest rates next month. First-time jobless claims up to 207,000 last week. Bloomberg's Ann Cates has more.
Demand for workers is solid, and the layoffs that made headlines earlier this year have largely eased. Planned layoffs are down 37%. A report from Challenger Gray and Christmas finds employers unveiled more than 47,000 job cuts in September, a sharp decline from the month before. So far this year, companies have planned to hand out more than 604,000 pink slips, a 198% increase over the same period last year.
Thanks, Ann. Two-year yield at 5.02%, the 10-year 4.71%. COMEX gold, $1,834.30 an ounce. NYMEX crude trading at $83.01. That is down less than 1.5%. The Japanese yen, 144 on the dollar. The euro, 105.41. British pound, 121.86. And that is a Bloomberg Business Flash.
All right, Steve, thank you. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington, where we have caught up with Kaylee Lines here in our studio. Join us on YouTube. Search Bloomberg Global News, and we'll be here waiting for you when you arrive. Nice to see you today. Not a lot has changed since we spoke this time yesterday. It's still on Capitol Hill, the same situation. Steve Scalise, Jim Jordan, the only two to really raise their hands on a formal level to run for Speaker. And the funding debate is on ice until this is solved.
Oh, complete paralysis at the moment, because what is Speaker pro tempore Patrick McHenry able to do? We think not much. Do we know for sure? It's a little bit fuzzy.
We'll see if we need to see.
But the popular thinking is that really all that he's going to be able to preside over is a speaker vote. And that's not going to happen until next Wednesday.
Right.
And between now and then, we could maybe see more hats tossed in the ring, but it does seem like it's these two candidates really leading right now.
I just want to know if they're going to change the rules for Donald Trump. We talked about this last hour when it was the messenger. Now we can tell you there's a terminal headline. NBC is also reporting that he's considering a visit to the Capitol amid the race for Speaker. He said yesterday, a lot of people are asking. The messenger said he's obsessed with this right now, and his phone is burning up with Republicans asking him to come to town.
Well, we know he can't be Speaker, right? Republican
unless
conference
they change the rules.
At
Which
the moment,
they can do.
If you're under indictment, you cannot. The thing is, though, one of these individuals we're talking about who has already tossed their hat in formally, Jim Jordan, is a very close ally of Donald Trump. So I wonder if he does make an appearance, if it really is going to be to support him over Steve Scalise, or what exactly he would say.
Well, the messenger reported that he's been having this fantasy of actually having the job for a couple of months. You come in here, you hold the gavel. I mean, maybe he could slam that gavel even harder than Patrick McHenry did and sort of run the thing, take the lap, and then you just go down the other end of Pennsylvania Avenue and become president.
So be Speaker until November 2024? Be Speaker until Iowa?
He said a few months, until the campaign, until the first, maybe Iowa, we'll call it. Maybe the first trial of, well, I don't know. As he put it yesterday, a lot of people are asking.
A lot of people have been calling me about Speaker. All I can say is we'll do whatever is best for the country and for the Republican Party.
Would you take the job? Would you take the job?
We have some great, great people.
Would you take the job?
A lot of people have asked me about it. I'm focused.
A lot of people are asking me about it. The phone's burning up. I don't know what's going to happen, but they're asking, and we'll see. Of course, if that
we'll
comes,
find out more Tuesday.
You're going to be down there with. Can you imagine the media horde on that day when Donald Trump comes to the House?
I'll wear my sneakers.
I don't think he can resist it. I'll say that right now. This has to happen. He's not going to be able to resist it. So, elsewhere, Mitch McConnell says, if you want to do this right, lose the motion to vacate. So we're talking about a complete new look at rules and everything when it'll be a brand new day, I guess, next week.
Well, and McConnell's not the only one. You have members of the House, Republican members of the House, saying we're not going to vote for anyone for Speaker if they don't change the rules. Because the idea is if you leave it where one individual can decide to move on the motion to vacate, we could very well be in a repeat scenario a few months from now. If there's one person who doesn't like what whoever the new speaker becomes is doing.
We'll just be it'll be a revolving door, and then no one will really ever want the job. Not that they're taking Mitch McConnell's advice right now. But we have to talk about this with Eli. I'm glad to say Eli Oakley is back, U.S. politics analyst at Morning Consults. Eli, it's good to see you. You're going to start running numbers here on this race like you would a presidential campaign?
I think we are. Check back in next week. I mean, all this situation needed was Donald Trump to insert himself into it.
Okay, well, when we're talking about Donald Trump, obviously he is riding just a continued wave of support, and his lead keeps on growing and growing and growing, and maybe someone feeling that invincible might think, I could be Speaker of the House. There's no real sign of that fading, right, Eli?
Yeah. I mean, his level of support is incredible. It's like 3 in 5 potential Republican primary voters support his bid. There's not a lot of opposition to his ascent to the Republican presidential nomination next year. We have not yet asked voters where they are on him being Speaker of the House. It's hard to see him doing it, honestly. I mean, it's kind of an insular, real job that you have to get legislation done. You have to plan votes. You have to herd the cats of the House Republican Conference. But it's going to be a tough job for whoever gets it. I mean, one of the things we noticed that really stuck out to us in the last few weeks is there wasn't just like a popular uprising in the Republican electorate against Kevin McCarthy. Since the beginning of September, his standing with Republican voters who have views about him hasn't really changed. He's kind of popular. about twice as popular than unpopular with the Republican electorate. Clearly, this was an insular personal attack on Kevin McCarthy among these 8 House Republicans who just didn't like him. That motion to vacate, you're right, is a big gun over the heads of anybody who takes this job. And that's going to be pretty consequential in the coming weeks.
Well, that's true. And the idea of eliminating the motion to vacate is compelling. You see, Matt Gaetz tweeted about this. Kaylee, producer James just sent this along. He says, okay, let's negotiate. And he retweeted something from Ro Khanna. Actually, it was about Ro Khanna and an anti-corruption plan that he put forth, a ban on congressional stock trading, 12-year limit for Congress, a ban on political donations from lobbyists or PACs. Matt Gaetz says, if we enact the reforms Ro Khanna lays out there, I'll basically give you whatever you want on the motion to vacate for this stuff. Maybe we run numbers on this too. Eli, does this all get renegotiated after what we saw a couple days ago?
We'll see. I mean, it's a pretty good card to have if you're some of these conservative rabble-rousers. I think looking forward, the challenge for the Republican Party is that it's made some gains since 2016 and since 2020. When you ask voters about its capability to govern, it has an advantage on this question over the Democratic Party. We're going to see how much some of this stuff in Capitol Hill breaks through to the electorate. I mean, it's always important to remember some of these stories that we obsess with here in Washington don't really break through. I assume the speaker being ousted probably will. And I think that plus this prospect of another government shutdown, this continued spending debate, could do something to put a drag on the Republican Party when voters think about its ability to do the job moving forward.
Yeah, we're staring down that November 17th deadline. It's going to come up pretty quickly, especially if we potentially could be looking at a prolonged speaker fight, Eli. When we talk about, though, the issues on Capitol Hill, a lot of the issues that are going to be relevant in this speaker's race, whoever ultimately is vying to get the majority votes that they need, include Ukraine funding, big one. This is something that Jim Jordan told reporters yesterday. He is not in support of doing any further, despite what the Senate and administration may be seeing. Where are Americans on the issue of Ukraine funding, Eli?
Yeah, I mean, the electorate's funding Ukraine is still pretty popular among voters. It's less popular than it used to be. But I mean, part of that is just the American people aren't paying attention to the war like they did at the beginning of it. There's still a good chunk of voters who back supporting Ukraine. But you're right, it's divisive among Republican voters, and it's very divisive among Republicans on Capitol Hill. I mean, even Mitch McConnell's out there supporting it. There's a chunk of the Republican electorate who is still on board with sort of the old school American strength abroad. And then there's these new dissenters, but they have all the cards right now on Capitol Hill.
We're talking with the Oakley at Morning Consult. I know you have new numbers on impeachment. And this is important because you're showing a backing actually increase among Republican voters, but we have really no way to move this forward until there's a speaker either. It's just one of the big points of business that we'll have to wait until this is solved. What are you learning?
Yeah, about 70% of Republican voters support the current impeachment inquiry. Top line support hasn't really shifted. About half of the American electorate supports the impeachment inquiry into President Biden. I think that what we've seen in recent weeks as House Republicans had their first hearing is this is something that excites the Republican base. This is sort of a rallying cry among the average Republican voter and probably among some on Capitol Hill. I mean, it's a good thing to fall back on whenever you're having these spending debates. Ask people to take a hard vote on something, then go after Joe Biden the next day. It's always pretty popular to go after your opponent. This is something that riles up the Republican electorate, and I think it probably does too with the number of Republicans on Capitol Hill.
Does it have a galvanizing force for Democrats, though, on the other end, Eli?
I mean, what we're seeing is a bit of dissension among the Democratic electorate. About 3 in 10 Democratic voters support the current impeachment inquiry. That lines up pretty well with the level of opposition to President Joe Biden in a Democratic primary. I think clearly he is in the driver's seat of this primary, and in the Democratic Party. He's the face of the Democratic Party. There's no chance of unseating him, but he does face some level of weakness and support among the Democratic base. I think one of the big things we're going to be watching in 2024 is you have 2 likely nominees for president who have very unique vulnerabilities, be it Joe Biden's age, be it Donald Trump's criminal liability. That sets up the prospect of maybe a low energy election in terms of voters showing up to the polls next November.
Just don't tell Donald Trump you said low energy. He just bagged $45.5 million in the last quarter, Eli. The fundraising numbers are starting to emerge. That's triple what Ron DeSantis pulled. His numbers went down as his polling also goes down. And I wonder what the view is now from your perch at Morning Consult as some members of the RNC question even continuing debates after next month.
I mean, what's the point of them at this point? I mean, you have the front runner with 3 and 5.
That's what Donald Trump says.
Among the electorate. That is what he says. And the Republican base is tuning this out, too. I mean, there was less interest in the second debate than there was in the first. There was no increase in support for anybody. I mean, after the first Republican debate, we saw Nikki Haley's support double, but it was from 3% to 7%. I mean, why does that even matter? Until the Republican candidates consolidate, if they are willing to consolidate, this is Donald Trump's to lose. The support is just too divided. If there are forces in the Republican Party who want to unseat Donald Trump, this race is going to have to narrow dramatically in the coming weeks.
Yeah, and Eli, I think it's interesting looking at Morning Consult's polling data because some of the candidates that were more well-known, like Senator Tim Scott of South Carolina, is polling at, I believe, right now 1%. So it seems like whatever gain someone like Nikki Haley may get is coming from kind of those lower-tier candidates. It's not eating it all into Trump's lead. It's just kind of winnowing out the field at the bottom. Is that a right assessment?
Yeah, I mean, we've seen a little bit of growth from Nikki Haley, from Vivek Ramaswamy, maybe from Ron DeSantis. But yeah, I mean, Tim Scott could barely make the first debate stage at 1% right now, which would probably be surprising to a lot of folks if you asked them 6 months ago. He was supposed to be sort of the star in line for the nomination. There's just no energy for him right now. We'll see what happens with Ron DeSantis. He did raise money. He has money to spend. Donald Trump obviously outraised him in the coming weeks and months as Ron DeSantis pushes to narrow the debate stage, maybe to try to get some consolidation up there for voters to see.
Eli, I had a conversation last evening with a Democratic operative here in Washington who was more concerned about no labels, was more concerned about RFK Jr., was more concerned about even Cornel West disrupting this election cycle in Donald Trump or whomever's favor than he was about any specific Republican candidate. What do you think?
Yeah, I mean, look, Joe Biden does have these vulnerabilities. There is a small chunk, but a chunk of the electorate who wants to see somebody else. It's the same on the Republican side. That seems like the kind of scenario that could set up some of these defectors. And you don't need that many. Just ask Hillary Clinton what happened to her in Michigan in 2016. Clearly, that is something that the Biden campaign is concerned about. But he still has a modest advantage or tied with President Trump when you ask a head-to-head question for the generic ballot. But there is still a good chunk of the electorate, a meaningful chunk of the electorate that is undecided on this race and lacks enthusiasm for either Trump or Biden. No, the American people many folks don't want these candidates to be the nominees next year.
That's all at the presidential, Eli, but to circle back to where we started this conversation and just the sheer dysfunction we are seeing in the Republican side of the House of Representatives right now, when we think about the down ballot races, how do you think this impacts Republicans' chances to hang on to the House in 2024?
I mean, right now, the race for the House lines up pretty closely with the race for the White House. In polling, you do something called a generic congressional ballot. And those numbers mirror Biden and Trump's pretty closely among Democrats and Republicans, especially in an era of fewer ticket splitters. I think the 2024 race for Congress is going to align pretty closely with what's happening at the presidential level. I think this dysfunction on Capitol Hill, it'll be interesting to see if that feeds into how voters are even thinking about the White House next year.
Yeah, another snapshot from Eli Yoakley. It's great to have you back, Eli, politics analyst at Morning Consult with myself and Kaylee Lyons. Don't be a stranger, Eli. We'll do this again soon when you have some new research for us, as we always stay in touch with Morning Consult and what they're working on. We're going to go to the Hill next, and the latest from Billy in the House. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We check the markets all day long here at Bloomberg. I'm Steve Rappaport. Looking at the big three on Wall Street, we are still red. The S&P 500, the Dow, and the NASDAQ all down less than 0.25%. Stocks are slipping as traders fret whether or not the labor market remains too hot for the Federal Reserve to forestall another interest rate increase next month. How hot? Well, we'll find out tomorrow when the Labor Department releases the September jobs report. Look for that at 8:30 a.m. Wall Street time. Two-year yield, 5.01%. The 10-year at 4.71%. COMEX gold, $1833.50 per ounce. NYMEX crude, $82.56 a barrel, down less than 2%. Amazon is set to launch its first two-test satellite tomorrow in a race to build out a massive internet from space constellation. That's to compete with SpaceX's Starlink. Amazon had hoped to have the satellites for Project Kuiper in space a year ago, but that project was delayed. Shares of Amazon currently down less than 1%. And that's a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Without a plan in sight, and that, of course, remains the case in Washington. Kaylee, not only don't we have a speaker, as we've established, we have no plan to fund the government past November 17th, and we're going to be doing this countdown clock until then. We're going to talk in a few with Bloomberg's Billy House, who's been all over this stuff. You can't see a picture of Kevin McCarthy without him at his side. Will that be the case for the next speaker, I wonder?
I don't know.
He's the speaker whisperer.
He is.
Staking out the office here. But there's, we've got a race here between Steve Scalise and Jim Jordan. Mm-hmm. And there's a great chance that they cancel each other out. And this is something we talked about with our panel last hour. Getting to 218 is hard enough. If they each bring a couple hundred or 100 to the table, we're gonna slice this up, much like is happening in the Republican presidential primary.
Completely.
And there might be a day in which Kevin McCarthy says, "You missed me yet?"
Well, this is what's so interesting, is in some ways Steve Scalise is like the continuity candidate, mm-hmm. right? He is seen as someone who has a lot of leadership experience, probably can do okay with the moderates in the Republican Party. Then you have Jim Jordan, who would be able to wrangle all of those individual members, in theory, of the Republican Party who caused Speaker McCarthy such a headache. Those are two very different factions of the Republican Party, however. Right. So if one takes one takes the other, that does not get you the majority that you need. The math just simply, it doesn't work.
That is for sure. Then comes the matter of, just coalescing around anything, never mind a candidate. We had Matt Gaetz on with us yesterday, not the most popular man in the room right now, but unless a motion to vacate changes, somebody like Matt Gaetz could tip over the cart anytime he or she wants.
Exactly. And that's why you have a lot of members saying we need to change the motion to vacate when there's a new speaker. Mm-hmm. But I don't know if you'll be able to do that, right? Like, it's just, there's so many questions. And to the point you were making about we don't have a plan to fund the government,
Thanks.
It's not even just about trying to get a continuing resolution done by November 17th, if you can do it. Otherwise, the government shuts down. At some point, 12 appropriations bills are going to have to be reconciled between the House and the Senate. And whoever the new speaker is has a really difficult job ahead of them to align conservative priorities with what Democrats are going to sign off on.
But think about what you just said, though. That could mean, if we shut down on the 17th and that stuff isn't solved for the rest of the year, does that mean you're shut down the rest of the year?
I don't know, but you know what happens on January 1st? That 1% across-the-board spending cut from the debt ceiling deal that no one wanted to stick to, but I think
only thing
that still
left
happens.
From the debt ceiling deal. Oh, my God. Billy House, bail us out. Let's go to the Hill right now. I always love Billy's crypt-like booth on Capitol Hill. If you're with us on YouTube, you see what I'm talking about. Billy in the house, it's great to see you, sir. Are you going to be at the shoulder of whomever is the next speaker? Because, they'll be looking through Getty images of Kevin McCarthy 100 years from now, and you'll be in all of them.
Yeah, I'm like Zelig. I'm everywhere, doing nothing.
You are. That part we know
that's
is
not true.
Trust me, by the way, Kaylee, come in here on a Sunday afternoon when there's tumbleweeds Billy House will be at his desk.
I believe it.
I know that firsthand. All right, so Billy, what should we be looking at here? We're talking this up and down, and I guess for the next 5 days, it's whipping time for Scalise and Jordan.
That's right, and perhaps others, but it's come down to those two so far. And a big Tuesday night candidates meeting with their colleagues behind closed doors, and then perhaps a vote Wednesday. But we don't know if anybody can get 218 votes, and they would have to do so because this, of course, is an election that both Democrats and Republicans will take part in. So a lot of questions about what's going to happen over the weekend. How they're out politicking, they're talking to groups, members, they're putting out their letters, both of them. And we don't even know if they're all the candidates.
Well, Billy, I was going to say, we haven't gotten a letter yet from Congressman Kevin Hern, but he was in that Texas delegation lunch yesterday along with Scalise and Jordan. It seems like he could be the kind of third-party candidate here, if you will.
Absolutely. He could be the default candidate. At least that's how he's going to put himself out there. Jim Jordan today, though, kind of underscored, and this is kind of an odd twist, he's the guy who can get the support of the anarchists, basically is what he's saying, is that those 8 who undid, Republicans who undid McCarthy are people that he can reach out to better than Scalise. So Scalise, of course, differs on that, but he does have a history of being a little more pragmatic, a little more, I wouldn't say moderate, he's a conservative, but he's never been a flamethrower, and you really can't say that about Jim Jordan.
What does it mean that Kevin McCarthy is making phone calls, or his aides at least are making phone calls on Jim Jordan's behalf?
That's right. I asked that question actually to a staffer, and I won't name him, heavily involved for one of the candidates, and for Jordan actually, and he said there's good and bad in that, and certainly those staffers know what they're doing. They know key people to call, but on the other hand, they are McCarthy staffers. So you got the good and the bad on that.
Speaking of McCarthy, Billy, has he settled into his new office, as in Nancy Pelosi's old hideaway office?
Well, she's moved. There's a lot of flap about her.
It's in process.
Yeah, exactly. She's actually moved just down the hall, so it was a little overplayed. But McCarthy's sign is still up over the Speaker's office. I had erroneously tweeted, or maybe I caused it to stay there, that they were going to take it down. Maintenance crews here were ordered to take it down, but once they saw my tweet, they kept it up. But it's still there, even though Patrick McHenry's kind of running the show now, if you want to call it a show.
Well, let's get into this for a minute here. People, until this happened, didn't know exactly what the heck a hideaway was in the U.S. House. Billy, how often was Nancy Pelosi using this space? And as she calls it an eviction, what does it actually mean for her duties and her work on the Hill?
Well, first of all, this dates from the 1920s or a couple of years earlier, when Speaker Joseph Cannon, a powerful speaker, decided he was going to stick around after he lost the gavel or gave up the gavel. But there were no House office buildings then, so they had to find an office for him. So they found one for the Speaker Emeritus. And that's sort of been the tradition since, that there's been an office for the former Speaker if they continued in Congress. Over the years, that has grown into lots of offices for lots of members, senior members. This is a building full of rooms that were meant to be basically storage for boxes, had no windows, and they're everywhere. Then there are other rooms that are beautiful, as was Pelosi's office and now Kevin McCarthy's office. So this is a long history, and some of these rooms have a lot of history, and it's kind of humorous, some of the things historically that have gone on in those rooms.
Well, and it's just the idea. I understand that you say she's just moving down the hallway. Maybe it was made into be more of a big deal than it actually was. But didn't it feel like kind of retaliation? The Democrats all voted unanimously to oust McCarthy. Take that, Speaker Emerita.
Absolutely, and that was raised by Republicans, and it also was but but a lot of them suggested, and if you want to think back, Pelosi kicked the vice president, Mike Pence, out of his office, which happened to be right around the corner in 2019, when she and Democrats took back the House majority. He had been given an office by Republicans. She kicked him out of that office. It's kind of humorous that they're right around the corner from each other, but that's one thing that Republicans note.
Billy has not been on Capitol Hill since 1919. I can report.
No.
Billy, how many folks are left up there? Other than how many lawmakers are actually still here in D.C.?
Because we have a looming new shutdown deadline in 39 or 40 days. Nobody's here. Everybody's out.
Great.
So it could be that they worked too hard getting the last ditch effort. They kept government open this last weekend, and then they went home. They'll be back, and I'm sure we're going to have a stretch run drive to first get a speaker, probably, and then actually pass legislation.
Billy, we just have 20 seconds left, but is there any chance of that October 11th Wednesday speaker vote moving?
Again, it's behind closed doors. I don't see any chance that it's moving, but I see a chance that it not reaching a conclusion. So that's probably the most likely outcome.
Behind closed doors is not going to work for me.
Especially if Trump's in the room.
Well, if Trump, right. Remember last time, though, they had cameras everywhere. Now we're going to go behind closed doors. I don't know. We'll have to stay in touch with Billy, obviously, in his hideaway on Capitol Hill. Billy House, thank you as always. Let's get you up to date on the news here. World and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Joe. A Russian drone strike on a grocery shop in Kharkiv has killed more than 4 dozen people. Ukrainian President Volodymyr Zelensky, who is attending a summit with European leaders in Spain, condemned what he called a brutal attack and renewed his calls for allies to provide air defenses. Well, more details are coming out about the August plane crash that claimed the life of Russian mercenary chief Yevgeny Prigozhin. Russian President Vladimir Putin says fragments of a hand grenade have been found in the bodies of several of those who died in the crash. All 10 people on board died. Putin says the investigation into the cause is ongoing. Well, President Biden, who has vowed not to build 1 foot of border wall, is now reversing his policy. We get more from Bloomberg's Irv Chapman.
No, he still believes it doesn't work. The president said Congress gave him no choice but to go ahead with the project.
A border wall, the money was appropriated for the border wall. I tried to get them to reappropriate, to redirect that money. They didn't. They wouldn't. And in the meantime, there's nothing under the law other than they have to use the money for what was appropriated. I can't stop that.
Official public notice said there's an acute and immediate need to construct physical barriers to prevent unlawful entries into the United States. In Washington, Irv Chapman, Bloomberg Radio.
Secretary of State Antony Blinken and Homeland Security Secretary Alejandro Mayorkas are both in Mexico, where they've been discussing shared concerns with Mexican leaders. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. I'm Steve Rappaport. We check the markets all day long here at Bloomberg. We are back in the green. The Dow, the NASDAQ, and the S&P 500 all up. That is less than 0.25% for all three. Stocks have been down today as investors worry that a hot job market will lead the Federal Reserve to raise interest rates next month. Federal Reserve Bank of San Francisco President Mary Daly says policymakers can hold interest rates steady if the labor market and inflation continue to cool or financial conditions remain tight.
The welcome decline in inflation we've all been waiting for has come without significant deterioration in economic growth or the labor market. The economy and the labor market are slowing, but not severely or abruptly. And these developments have led market participants, businesses, and households to replace fears of recession with hopes for a soft landing.
Daly spoke earlier with Bloomberg's Lisa Abramowitz. Checking the two-year yield, we are at 5.02%, the 10-year 4.71%. COMEX gold 1834.10 an ounce. NYMEX crude trading at $82.25 a barrel. That is down more than 2%. Japanese yen 148.37 on the dollar. The euro 105.47. British pound 121.93. Novo Nordisk drugs that are commonly used for weight loss are linked to higher risk of stomach issues, according to a health database. But Novo Nordisk says it stands behind the safety and efficacy of its medicines. Shares of Novo Nordisk right now are up more than 0.75%. And that's a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
It's a promise that Joe Biden made, Kaylee. Not another foot, I think, was the line.
Yep.
When it comes to Donald Trump's border wall. Thanks for joining us on Sound On as we go back to an NPR interview that Joe Biden did on this.
No, there will not be another foot of wall constructed on my administration.
But we wake up to the headline today, Kaylee, that the administration is announcing plans to add 17 miles of barriers along the Rio Grande, essentially adding to Donald Trump's border wall.
Right. A little bit of a contradiction here. And so naturally, when press was in the Oval Office with the president earlier today, he was asked about this.
Well, that's true. And, he wasn't planning to take questions, but he did grab that one. Here's how it went.
I'll answer one question on the border wall. The border wall, the money was appropriated for the border wall. I tried to get them to reappropriate, to redirect that money. They didn't. They wouldn't. And in the meantime, there's nothing under the law other than they have to use the money for what it was appropriated. I can't stop that.
Do you believe the border wall works?
No, he doesn't think it works.
Doesn't work, but build it anyway.
I don't know what to do with that. This is, I guess, technically an appropriations issue.
Yeah.
But it is something he said would not happen.
Yes, which probably is a reflection of the difficulty this administration is now having in addressing the border issue. When you have cities like New York going through what they're going through, and Eric Adams making a whole lot of noise, the mayor, of course, of New York City, lots of lawmakers on the Hill trying to tie the border issue to the Ukraine funding issue, and it's just really difficult. So maybe this is just a president who's saying, okay, we got to be seen doing something.
Sure,
or trying.
Julie Fine had quite a conversation with Greg Abbott, the governor of Texas, about all of this a couple of days ago. He was adamant that the wall does work. And we thought we'd bring Julie in for this conversation. Our Texas bureau chief is with us now from the beautiful metropolis of Dallas. Julie, how does this play anywhere for Joe Biden when he says not another foot and we get 17 more miles?
I think how does this play for the president is that a lot of people are asking, okay, why now? Now he's saying it's an appropriation, but he doesn't think it's going to work, but it's already been, there's already the money there for it. That's questionable in its own right. There's going to be a lot of questions about that. It'll be very interesting to see how Texas reacts to this because, Texas doesn't like to rely on federal dollars, but says yet that the federal government should be more involved when it comes to the border. So I'm curious to see how all of this will play out here. But the bottom line is, this is a problem that is not going away. This was a problem under many Texas governors. This has been a problem under many United States presidents. And the bottom line is, when there's no comprehensive immigration reform, this will continue to happen. And I don't see the appetite for that in Congress.
Well, Julie, you say it's a problem, and I think everyone recognizes that it is. It's just a question of whether trying to build more miles of wall is a solution. The president himself said he doesn't think it works. Is the feeling in Texas that it would work? Please build it.
I think the feeling in Texas is there are many people here, especially in the Republican Party, that want to see more wall or some kind of deterrent or just something done about immigration. So therefore, there's always been a lot of support for the wall, especially for many who live in these border cities where they are constantly having the influx of people coming in and coming out. You look at some of the major cities here, you're not on the border. But for the cities that are, this continues to be an issue, and there is a lot of support specifically within the Republican Party all the way through for more deterrence and walls.
Let's go local for a minute, because this public notice from the Department of Homeland Security, Julie, says they're waiving environmental and tribal land protections to speed up construction in this area. How's that going to go over in border towns in Texas?
Well, first of all, waiving any regulations generally with many of the voters here in Texas is a big win in their opinions. However, if you're in a border town, many people don't want to lose their homes. And that has been an issue all along, specifically for ranchers. So they'll have to come to some type of an agreement on that. But yeah, that has also been a major problem when it comes to deterrence and walls here. What do you do with the people that live there that have spent a lot of money? And what if they don't want to get rid of their homes? Then on the flip side of it, Joe and Kaylee, which I think is also very important to point out, there are a lot of people that live on the border that are frustrated that may not lose their homes because they've got people running through their yards at night. So I think overall, the wall, well, for many is a great solution. For others, creates a major problem. But I think it's very difficult to see, unless you live in these border cities, how much all of this can affect people's everyday lives.
Yeah, and Julie, of course, to reach the wall, you have to make it to shore. You have to cross the Rio Grande first. What's the latest on the buoy saga?
Well, the buoy and the barbed wires, that has now gone through the Texas Fifth Circuit. Now, as you know, the Fifth Circuit of Appeals is one of the most conservative courts in the United States. They heard arguments on that yesterday, and we will find out soon what their ruling will be. But I will not be surprised if you see this go all the way to the Supreme Court.
Yeah, Greg Abbott was pushing back pretty hard when you asked him about that. A couple of days ago, he said that the reporting was not accurate, that these were putting people in danger or blocking navigation in the river.
Well, and he frequently also says the person that puts people in danger is the president by the border policies. That is what the governor frequently says about this. But the bottom line, it's not a safe situation when anybody's trying to cross the border. They have to come for miles and miles and miles, then make it through. Then you get across the border. Then you ask for asylum. Then it's figuring out where you're going to go and processing you in the meantime. Sometimes families don't end up being together. It's really an awful situation.
Yeah, absolutely. And of course, this is a story that Texas is really at the front lines of, but it's extending elsewhere. When people in Texas and the mayor of New York City, Julie, are singing kind of a similar tune, what does that say?
Well, I'll tell you, that's very interesting. And you all saw that I discussed that with the governor. I mean, the governor has basically said this is what people in Texas have been feeling for a long time. And politically, you know, obviously it was viewed by many as a stunt when these buses went to Democratic and blue cities. But the bottom line is where they ended up now, local officials there have to figure out how to handle this and how to do it humanely. So they somewhat ended up on the same page at the end of all this because essentially they're dealing with the same issue.
The same issue that we will keep talking about with Julie Fine, our Texas Bureau Chief. It's great to see you, Julie. Thank you for the insights today, as always. I'm Joe Matthew with Kaylee Lines in Washington. This is Sound On, the fastest show in politics. As we now learn that Donald Trump has a thing about being poisoned. Did you hear about this last night? It's made its way from the book to late night TV and to Sound On. We'll do it next on Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Steve Rappaport. General Motors says it presented a sixth contract offer to striking auto workers. Sources tell us the new package shows progress on key issues. GM in an email says it's ready and willing to negotiate in good faith 24/7 to reach an agreement. Hyundai and Kia plan to adopt Tesla's North American charging standard to power up their electric vehicles. Bloomberg's Charlie Pellet reports.
Steve, it'll give the vehicles access to thousands of Tesla superchargers across the two countries and Mexico. Tesla's superchargers are coveted by other automakers because it has more direct fast charging plugs in the U.S. than any other network, and its stations are in prime locations along freeway travel corridors. Hyundai North America says that new Hyundai electric vehicles in the U.S. will come with the charging port beginning in next year's fourth quarter. Steve?
Thanks, Charlie. Shares of Tesla and Hyundai are both up. Google is looking to challenge Apple head-on with new Pixel phones. The Pixel 8 and 8 Pro are closer in price to Apple's devices, have similar flat-edge screens, and can make payments with a Face ID. The new Pixel phones also have updated cameras. And Walmart is looking to expand its talent pool, so it's scrapping its degree requirement for some corporate jobs. The company says the move is part of a broader effort to eliminate unnecessary barriers to career advancement, and it reflects a wider focus on skills among employers nationwide. Researchers believe there are advantages to the skills-first hiring process. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We'll talk coming up about Donald Trump's greatest fear as exposed on late night television. First, a check on world and national news. Nancy Lyons joins from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. We're just getting news that the gunman who opened fire on a packed Brooklyn subway car during rush hour back in 2022 has been sentenced to 10 life sentences. That's one for each of the victims wounded in that attack. Frank James pleaded guilty to 10 counts of terrorism back in January. The campaign for House Speaker is in full swing with less than a week before the first vote. Two candidates have announced their interest, House Majority Leader Steve Scalise and Congressman Jim Jordan. Democratic Congressman Brad Sherman of California says his party wants Hakeem Jeffries, but he speculates on who will actually win the job.
I wouldn't be surprised if it ends up being Scalise in the number one position and Jordan in the number two position. I also wouldn't be surprised if we have continuing chaos.
Congressman Brad Sherman spoke on Bloomberg Sound On. The first vote for Speaker is set for next Wednesday. The ouster of Kevin McCarthy has Democrats looking to take political and monetary advantage.
More than 20 congressional Democrats sent out fundraising emails after they joined with 8 Republicans this week to toss McCarthy from the Speaker's chair. President Biden joined in the fray as well, saying in his own campaign email that Republicans like Marjorie Taylor Greene are floating former President Trump as a Speaker. Republican Congressman Matt Gaetz fired off his own fundraising emails as well. He spearheaded the effort to remove McCarthy and slammed the former Speaker for working with Democrats to keep the government open. In Washington, I'm Nathan Hager, Bloomberg Radio.
Lawyers for Donald Trump are asking a judge in Washington to dismiss the federal election subversion case against him, arguing he's immune from prosecution for actions he took while serving as president. Likely foreseeing this kind of argument, the special counsel, Jack Smith, wrote in the indictment that though political candidates are allowed to challenge their election losses, Trump's actions strayed beyond what is legally permissible. Trump's lawyers also asked the judge overseeing the classified documents case to push the trial until after the election, citing scheduling conflicts. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
All right, Nancy, thanks. As we learn, one of the great fears, might be Donald Trump's greatest fear, Kaylee, is being poisoned. Cassidy Hutchinson, who, of course, testified before the January 6th committee, he's got a book out now.
Yep, making the rounds.
Former aide who talked about him grabbing the Secret Service agent and a lot of things, actually, in that testimony. She shows up on Jimmy Kimmel. This book has been a life changer for her, and they start talking about throwing food around. She had that whole story about he threw the plate at the wall. The ketchup is more where that came from.
I don't know, maybe people know it, but he does have a very potent fear of being poisoned.
Did not know he had a fear of being poisoned.
Well, now you do. So he uses and prefers the small Heinz glass ketchup bottles because he likes to hear his valet, whoever is serving him his meal, he likes to hear the pop when you...
Really? How about this? I'm fascinated by, the pop, right? When you open the ketchup bottle, it's pressurized.
Right.
So it's sealed before you imbibe on the ketchup. And I guess that's a comforting sound for him.
You can't do that with all food, though.
No, you can't.
Does he have
which I guess is why he eats
tester?
There's a lot of ketchup going on around there. It's flying around the room.
Well, it goes well
apparently.
with the McDonald's.
It does, and his favorite meal is apparently a well-done steak with ketchup, which is enough to make anyone reel if you actually appreciate good beef. But poisoning, to be walking around with that, because that's not something you're concerned with, I'm guessing.
Poisoning, no.
Greatest fear?
Buried alive.
Being buried
Hands
alive?
down.
You've thought about that?
Actively. I just have
like
no
where you
desire
wake up in the casket in the dark?
Exactly.
That's a horrifying, what a chilling thought.
And you just know that it's the
I
end,
can't
but it
compete with
takes a
that.
long time to come.
I can't compete with that. That might be my greatest fear now that you've said that. You need to watch, if you haven't seen Kill Bill, watch Kill Bill tonight with your husband. You'll know what to do. I think Kaylee could bust her way out of that.
I would try my hardest.
Yeah, absolutely. You'll know what I mean when you see it. All right. We'll meet you on Balance of Power later. Bloomberg Business Week now from the Sustainable Business Summit.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. We are not live in our normal studio,
but we're live.
Are you alive?
I feel alive. I feel alive.
He is alive. We are live at the Bloomberg Live Sustainable Business Summit. Speaking of live, we're also at the link at Bloomberg headquarters in New York City, and we are, of course, on YouTube and on our streaming service. It's a busy day.
It is a busy day. You know what I love about broadcasting from right here?
What? The food is really
Yes,
quick.
I'm so close to the snacks.
This one is eating all the time.
I'm so close to the snacks. I can just go over there and get snacks.
What a sign of how well the economy is doing. Let's just see how much Tim is eating on a regular basis. We are seeing some investors come into the market, certainly on the equity side of things, buying a little bit on the dips today. But again, every day, right? Labor data, and tomorrow's the penultimate, I feel like.
Yeah, but we're getting mixed data. So it's like, is it a hot labor market? Is it a cooling labor market? Oh, we're going to have more on this coming up. Also, Carol, great story out today. On and off again, girlfriend of failed crypto king Sam Bankman-Fried. We're talking about Caroline Ellison, a true SBF insider. What she knows behind the downfall of FTX
It's
and
always the
SBF.
girlfriend or boyfriend who knows it all.
I know.
They always do. All right, we're going to get into that. We're also going to talk about the evolution of AT&T, which has gone through over the last 20, 30 years, and then some, a few iterations, if you will. But right now it's exploring options for its multi-billion-dollar ownership stake in DirecTV.
I'm looking forward to that one. You heard about the Clorox hack, right?
I did.
Yeah, and then there's, of course, the MGM and Caesars last
good.
month.
Yeah.
We're going to be joined by Todd McKinnon, CEO at the Security and ID and Authentication Application Software company Okta. Back in business, AI, and the recent MGM Caesars hack and more.
And then we're going to get a check on the experiential world. We're talking about leisure specifically with Vince Perota. He's Chief Operating Officer at Omni Hotels and Resorts. And then we're going to talk about the importance of refugees, hiring them. It's part of the Sustainable Business Summit. So looking forward to talking with Gideon Maltz, CEO. I just talked with the CEO and co-founder, Chobani, who was the founder of this
This was part of the panel for this event.
Yeah, and he was founder of this organization and just stressed how important it was to have refugees as part of your workforce.
He's been hiring them for years.
He has, and he says it really makes sense. And then we're going to talk about, no easy segue here, but the rise in binging when it comes to drinking and drug use. There is a connection.
All that and more coming up on the program. First up, though, a check on the day's trade and top business stories. Here's Steve Rappaport in for Charlie Pellet.
That's right. Thank you. We check the markets all day long at Bloomberg, and we are mixed. We were up across the board for Wall Street's big three seconds ago. Now we have the S&P 500 down, albeit less than 0.1%. Dow up, also less than 0.1%. Same is going for the NASDAQ. Two-year yield 5.02%, 4.71% on the 10-year. With regard to the markets, stocks and bonds were backing away now from the worst of this week's rout, though key data tomorrow threatens to upend the market again. That would be the September jobs report from the Department of Labor, and that is due out at 8:30 a.m. Wall Street time. Karen Kimbrough is chief economist at LinkedIn.
So what we're seeing right now is that employers are still hiring. The labor market is cooling, but they're hiring in a really careful, cautious, intentional way. It's not what we remember from 2022, where they pretty much everyone who wanted a job could find one. So while the labor market is strong, we're expecting that probably numbers are going to come in around 200,000, give or take. That's a little bit above consensus.
That's LinkedIn's Karen Kimbrough. Economists surveyed by Bloomberg predict the U.S. economy added 170,000 workers in September, slightly less than the previous month. Checking commodities, we have COMEX gold $1834.20 an ounce, NYMEX crude $82.24 per barrel. That is down more than 2%. Japanese yen 148.41 on the dollar, the euro 105.50, British pound 121.94. And that is a Bloomberg Business Flash. I'm Steve Rappaport.
B.B. King. Nobody can talk about worry like B.B. King. Having seen him live a couple times.
Wow. That's pretty cool.
He was pretty cool.
What did you think about long-dated treasuries?
Didn't get into it.
Okay.
He thought more about the blues and
All right.
all that good stuff.
There's some blues happening.
Exactly. Losses on longer-dated treasuries beginning to rival some of the most notorious market meltdowns in U.S. history. And it's interesting, the moves almost making it akin to what we saw in terms of dramatic moves during the dot-com bust.
Yeah, bonds maturing in 10 years or more have slumped 46% since peaking in March of 2020. That's according to data compiled by Bloomberg. It's just shy of the 49% plunge in U.S. stocks in the aftermath of the dot-com bust at the turn of the century. The rout in 30-year bonds, Carol, has been even worse, tumbling 53%, nearing the 57% slump in equities during the depths of the financial crisis.
We had to lay it out because it's been a big week for the bond market, also a big week for labor data. So we've got two great voices on all of it. Bloomberg News International economics and policy correspondent Michael McKee is here with us at the 6th floor link at Bloomberg, and Bloomberg News deputy team leader for U.S. equities. So thank you. Mike, I do have to start with you. Economic data today, jobs market, what's the trend? Is there a clear trend so far in the data we're getting?
It basically this week, with the exception of ADP, which is kind of something we say all the time, the data have suggested that we will have a reasonably good jobs report. Now, momentum has slowed. The consensus forecast is for 170,000 jobs, which is the lowest in some time, but that's still a fair amount of jobs. And the consensus also sees unemployment falling. So at this point, it looks like things are pretty good. I'm looking forward to tomorrow at 8:30 when I personally decide which direction the bond market is going.
I will be listening because I personally will be listening to everything you
Tom
say.
Keene this morning, when I did jobless claims, he said, okay, now let's go to Mike McKee. Thumbs up or thumbs down for the bond market? Never mind the number. I'll just make the decision.
Your job description has expanded.
But you actually, it's funny, but you bring up a good point, and it's like another perfect segue to go into Jess, talking about the relationship between what we've seen in the bond market this week and equities. Jess, you're deputy team leader for U.S. equities here. I mean, the equity trade this week has been driven by bond yields moving higher.
It has, and as well as where the dollar's headed and oil prices. So as you saw some of those ease a little bit, that's why you're seeing not quite as much pressure more broadly in the stock market today, but nonetheless, it's very close to that. I had that story around technicals. I know Carol loves to talk about that yesterday with Elena Papina, where we're looking at kind of the line in the sand, the 4,200 mark. There's a lot of different levels. There's a Fibonacci level there, but there's obviously the 200-day moving average is hovering around that level too. And so if the S&P 500 were to break below that, there's not a ton of support levels between that and 3,900. So on the way up, when the S&P 500 over the summer was rallying, that's how sort of an air pocket higher, but on the way down, it sort of is the same indication there. So that's why it's such a pivotal level that a lot of traders are watching right now.
I'm not sure if Mary Daly is following those Fibonacci levels and so on, but she is following me a lot. She's, of course, president of the San Francisco Fed. She spoke at the New York Economic Club today with our Lisa Abramowitz, and she talked about Fed policy and the labor market. Here's what she had to say.
If we continue to see a cooling labor market and inflation heading back to our target, we can hold interest rates steady and let the effects of policy continue to work. Even if we hold rates steady exactly where they are today, policy is going to grow increasingly more restrictive as inflation and inflation expectations fall.
All right, so that, of course, is Mary Daly of the San Francisco Fed. Catch that whole conversation. You can check it out at Bloomberg.com. Mike, that conversation, I feel like we've heard that, right, from various members of the Fed. But what was it, if anything, that stood out maybe among that conversation?
Well, I think the point she made was that right now what we have seen in the bond market is equivalent to about a 25 basis point increase in rates.
So the bond market doing some of the work.
So the bond market is doing some of the work.
Explain how that works.
Well, because it's pushed market rates up. And what the Fed does is they lower the rates at the very bottom of the pyramid, sort of the raw material for banks. And then it trickles up through various lending tranches. And so the fact that we've seen treasuries go up has pushed up other loan rates, and it has made the financial situation a little bit tighter. It's interesting because basically she said we don't have to raise rates again if this remains. Now that's the question: does it continue like that?
I thought that was really interesting. We didn't hear it just now in the clip, but she did say holding rates steady is an active policy decision. It reminds me of something my mom always says,
Right.
which is like making no decision is actually a decision.
Well, that's because of the real rates that she was talking about. As inflation goes down, real rates go up, and they just increase the tightness of monetary policy. So that's something they'll keep an eye on as well.
Is labor restrictive enough, though? Or has the labor market turned enough for the Fed to be like, our job is done?
No.
I feel like if you ask ADP, you might get a different answer.
If you're using the labor market as an indicator, and the Fed is, but it's not their primary indicator. They're looking at inflation, obviously. But the labor market is still stronger than it would be ordinarily under these circumstances. They expected unemployment to rise over 4%, and to just absorb the new entrants to the labor force, you need about 100,000 jobs a month. So we're still well above that.
Right.
So the labor market is signaling still strength in the economy because all those people who get jobs get paychecks, and they take those paychecks and they spend them.
Can we talk about something near and dear to your heart?
Who, me?
Small caps.
I love small caps.
You love small
I
caps.
do
We're going to talk
love
about
it.
the beach or something.
Okay. All right,
All right, well, if we're
Mike,
talking
it is
about-
really the beach, but let's pretend it's
All
small
right.
caps for today.
Carol's, as long as I've known her, has been talking about small caps.
do like the
we
small
gotta
cap
watch
universe.
the small caps
Yep.
because they tell us about the economy. Jess, you watched the small caps today.
Yes.
What's
So
going on?
The so what there, and to Carol's point, not just the economy, but also when small caps bottom, that's usually a good sign for broader stock markets and large cap stocks like the S&P 500 or NASDAQ 100. But they haven't been just underpaying in recent months or over the past year. I mean, it's been 3 years that small caps, in particular, if you're looking at the Russell 2000, and it's not surprising because smaller, more domestically focused companies typically hold more debt. So as the Fed begins to raise rates and has been on this aggressive heightening cycle over the last 18 months, obviously those stocks continue to get pressured. And when you're looking at the composition for that particular index, it's more heavily weighted toward financials, energy. It's not really toward technology or growth stocks like the bigger counterparts. So that's why it just has not held up quite as well. And also, I was talking to Lizanne Saunders over at Charles Schwab, and she was talking about the amount of zombie companies that are typically within that. So those types of companies that just are not generating really when it comes to profitability. And T. Rowe Price actually had some data recently talking about how in that particular segment of the stock market, it's at an all-time high for those types of companies. So she feels like a lot of those names really need to be weeded out in order for that to really help pivot it higher. But there's some contrarian indicators there because sometimes small caps do correlate with what's happening with high yield spreads,
Right.
and they've peaked out. So you do have people on the contrarian side thinking that maybe the worst of the pain could potentially be past because it's been going on for
There's
so
a lot
many
of
years.
ifs in there.
There is.
So, Mike, come on back in here because the Fed watches a lot of different things, and they obviously keep a watch on the corporate picture and lending environment. What are we, when you look at kind of the full data batch, if you will, that the Fed thinks about, I mean, is there anything that, I don't know, that we need to kind of keep on our radar to kind of get an idea of what comes next or kind of where the Fed's going to go?
Well, we want to keep an eye on the data, particularly consumer spending and business investment, because as Jay Powell and others have said recently, we're right there. We're right at where restrictive is, and the question is it going to slow the economy as they want, but not send it into recession? Or have we gone too far? Does the rise in yields that we have seen in the markets these days suggest that the Fed is too tight? It may not be. I mean, we know that markets tend to overreact. They're probably repricing for a new environment of stronger growth, which the Fed missed, and for the Fed keeping on hold for longer, which they have been telling us forever. So the markets are repricing. They missed a little bit. They've come down a little bit now. Where do they go from here? Does it get really tight and we see the economy roll over, or is this exactly where we want to be?
I do wonder, with all these questions out here, like, is this what happens when maybe we are moving closer to a recession and a market turn point where we start thinking about resetting the valuations on assets?
Especially when you think about Dow Transports and Dow Theory and what that says about the economy. So most of those particular segments of the market that have been pressured have been driven by airline stocks. And that's because they have cut their earnings outlooks for the third quarter because of what was happening with oil costs and fuel costs. So that's really the pain point. I think if it broadens out to more of the segments, if you're looking at railroads and different industries like that, then that would be more of maybe an alarm bell for the economy, and a smoke signal when you are thinking about that in addition to small caps.
Mike, how does the Fed view energy prices?
Two ways. As regular people, they don't like paying more for gas. But at this point, they look through energy prices historically because there's nothing they can do about that. What they are concerned about when you get a big rise in some form of inflation is inflation expectations. Do people think that prices are going to keep going up? And we talked about this a couple of weeks ago, and inflation expectations have stayed moored, in part because it takes a higher high to get people to think that prices have gone too far. And we had $5 gas. And in recent weeks, we're seeing all the energy complex get lower. Gas prices are going down. Jet fuel prices are going down.
It's not just that, but on an inflation-adjusted basis as well, right? If you think back to, I think back to filling up my car back in 2008 and the sticker shock that I saw then. But as a portion of, my own income and what inflation has done since then, that was a lot more expensive than we've seen.
Yeah, people's ability to pay for what they spend on energy has improved, partly because everything is more fuel efficient, from cars to air conditioners to refrigerators.
But I guess what I'm saying is $95 a barrel oil right now is not the same as $95 a barrel oil in 2008.
Correct. And it doesn't look like we're going to stay in the 90s at this point. Oil's in backwardation, so we're looking at the possibility that prices start to come down again. And all that works in the Fed's favor. So I did want to point out one thing when you were asking Jess about the signs of recession. Everybody's saying, well, we've had this inverted yield curve. And when the inverted yield curve starts to uninvert, that means a recession is coming.
John Authors wrote about this, didn't I think today?
Here's the thing. The uninversion always occurs because the 2-year note yield goes down because the Fed is cutting interest rates. In this case, the 2-year has stayed where it is, and the 10-year is going up. So it's probably not an inflation-fueled worry. It's a sort of a term premium worry, and that's why it's hard to parse out exactly what it is, because there's so many things to worry about these days.
Well, it's a really good point, because I think about the market trend. I really just feel like in any 24-hour period, like the market is just looking at kind of the data points that are right in and kind of the trader think about recession or where rates go from here.
Well, you were talking about buying the dip earlier and heading into our segment, and I was looking at the retail flows data from JP Morgan as well as Vondatrack, and it looks like retail investors, they're not buying single stocks right now. They're actually adding exposure more toward diversified ETFs. So you saw more money, not surprisingly, coming out of Tesla, but still not quite as bad if you're thinking about like Nvidia or Amazon and some of those counterparts there.
But what's the narrative that accompanies that?
So really, it's not surprising because Tesla can be volatile like that, but that's telling you that investors might be a little bit more cautious on the retail side, especially heading into earnings season and typically what's a seasonally weak period of time right now.
Final 30 seconds, Mike McKee, since Tom Keene says you are the god. You're going to take that economic data.
I'm going to just look at everybody tomorrow and not tell them all this. You guys guess, right?
What should we keep top of mind as we go into tomorrow's monthly jobs report?
Well, the interesting thing is that the markets seem to be leaning towards a more significant gain in jobs. The forecast, as I said, is 170, but the whisper number right now is 190. It's been going up all day with the numbers we saw after the jobless claims numbers came in strong. People still seem to think that we're going to get a strong number tomorrow, and that certainly could influence trading if we get a surprise in either direction.
200,000 jobs added per month, roughly, if that is indeed what we see tomorrow.
With 5.5% interest rates.
That's what I was just going to say.
It's like amazing, right? like how we kind of continue to barrel on. Guys, thank you so much. Great analysis and setup for tomorrow. Thank you always. Michael McKee, International Economics and Policy Correspondent here at Bloomberg News. Catch him tomorrow on Surveillance. Jess Menton, Deputy Team Leader for U.S. Equities.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. I am Steve Rappaport. This update brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit Glenmead.com to learn more. We check the markets all day long at Bloomberg, and investors could be disappointed. It's been up and down the last few hours, and now back in the red for all three major indexes. The S&P 500 down less than 0.25%. The Dow, the NASDAQ, both down less than 0.1%. Two-year yield, 5.02%. The 10-year yield, 4.71%. COMEX gold, 1834.10 an ounce. NYMEX crude, 82.39 a barrel. That is down more than 2%. The Japanese yen, 148.43 for the dollar. The euro 105.46, British pound 121.91. Investors are concerned. They're awaiting a big report coming out tomorrow. The Labor Department will release the September jobs report. Earlier we heard today that weekly jobless claims were up at 207,000, but still they remain at near historic lows. And that's a Bloomberg Business Flash.
All right, so appreciate Steve Rappaport there, in for Charlie Pellet. Hey, so such high hopes many years ago for one of the oldest and best-known companies in U.S. corporate history, AT&T we are talking about. It's a brand created thanks, of course, to the actual creation of the telephone just before the turn of the 19th century. It became a behemoth, so big it led to a massive breakup of Ma Bell. Then through a lot of different things, legislative and industry changes, AT&T went on a buying spree, bought up companies. It also, remember, merged with TCI. I remember that because I just kind of got into Bloomberg. And then, you know, we just had AT&T thinking about wanting to be this kind of end-to-end provider, if you will. And Michael Armstrong was a big part of that architect.
Yeah, in 1997, he left running Hughes, which launched DirecTV during his tenure to become CEO of AT&T. His vision? To make it an end-to-end carrier during the dot-com era. Fast forward, though, nearly 30 years later, AT&T has begun to explore options for its 70% stake in DirecTV as it approaches the end of an agreement under which it can legally sell its interest in America's third largest.
I need a whiteboard. I need a whiteboard, or I need
This
Scott
is a case
Moritz.
study.
I need Scott Moritz, Bloomberg News telecom reporter who's been reporting on it all for us here at Bloomberg and into the latest iteration in terms of what AT&T needs to do to DirecTV. It's quite a saga.
It's been a strange and bumpy road, yeah.
So how did we get to where we are today with DirecTV? Which Armstrong, right, at Hughes, which created it.
It's all in the big family. At one point, this was in 2021, they were losing so many TV subscribers, satellite TV subscribers, because the internet was just replacing everything in terms of TV. So they needed to get it off the books, but not completely lose the cash that we're getting from it. So they put it into a JV, a joint venture with TPG, and they kept the name DirecTV. So that's how they got it over to that off-the-books kind of location. Now they want to, they're exploring ways to maybe sever that tie completely.
What does DirecTV do for AT&T right now? I mean, during the, when you were getting set up here, Scott, I was telling you I covered this back in 2015, and pay TV was in decline then. People saw the writing on the wall here.
It still brought in billions in revenue. So it was always this cash machine that fed the rest of the company. It finally got so bad in terms of subscriber losses that it took up too much the attention of the investors. But today, while they still hold part of the JV, they're still getting $2, $3, almost $6 billion a year from that venture paid to them.
That's real money.
Yeah, it is. And they don't necessarily want to lose it, but it's going to go down from here, from 6 to 5 to probably 4, and less in a few years. So best to maybe think about options now while it's still worth more.
Is the decline because of a decline in linear, or is it a decline because of, people are getting their internet from other places and can get YouTube TV, or they can, have other options on Hulu Live?
Or there's Starlink.
Yeah, a lot of different options right now. In fact, the only one that's really growing is YouTube TV, which sells for like $65 a month versus all the others for around $80.
That alone is like just a wild story. Right? We don't talk about it a lot, but I think about, we're on YouTube right now.
Yeah.
We've got our show. Bloomberg, in general has a channel. How do you think about, you've covered AT&T for a long time, of kind of what it is or needs to be going forward, or what its role should be in the telecom world?
Right. So the CEO, John Stankey, has outlined this kind of bare bones approach back to the basics of, their roots is wireless and broadband. So they're pushing a lot of fiber to a lot of places, or they want to be anyway. If they can afford it, they have to get a partner for that in some places as well. But wireless is also where they're pushing very hard. And those are the two main prongs of the business right now.
Are they a real competitor when it comes to fiber?
Yes, they are one of the biggest fiber providers in the United States.
On a consumer level or for businesses?
Yes. You don't hear much about them, right?
No. I mean, you think of fiber, you think of Fios.
Right. Good branding.
Yeah. I don't know. I mean, am I off base here?
No, they have about 7 million subscribers, fiber subscribers.
Including my home.
Yeah. Oh, yeah.
But what else they can sell, ultimately, are they going to get out of it completely? Will they need to?
The TV business.
The DirecTV business.
Yeah. It looks like I mean, they've been divesting all those media assets, as we're familiar with. Like they bought Time Warner, it turned into Warner Media, then they sold that off. They found that all those distractions weren't helping them at all, so they had to get back to the core business. I don't see them having much of a future in TV at all. I think they realize that.
But the story back then kind of made sense, though, in the terms of the content, at least in my opinion. It was like, okay, you're an AT&T subscriber. In order for AT&T to compete with T-Mobile and Verizon, throw in free HBO or something like that, right? And you get somebody to join. Why didn't that work?
Hard to tell. There was some friction between the two divisions, and I think they didn't want to flex that muscle so much that the regulators would crack down on them having exclusive content to just their customers. That would kind of ruin the whole, competitive landscape, basically. So, yeah, I think they saw more complications as they progressed down that merger panel.
Scott, when this headline crossed, I think it was last night, right? It was after the close. I'm trying to remember when it hit. There's been so much going on. But it was kind of like, I think we all had to scramble, like, oh, yeah, they still have this. Oh, yeah, like, wait a minute. Wait, how did they get in?
I think Scott knew.
Well, Scott knew. Of course he knew. But it's like we all kind of had to take a moment to be like, wait, is this a shocking thing or no? I mean, ultimately we're going to have to do something.
Yeah, and it's fair to forget about DirecTV because they've been pushed into this private equity, not a public company anymore. So investors don't care that much about it directly.
And they're going to want to do something, right? They've got to, they certainly don't want to see this investment go down to nothing.
Yeah, I would imagine that the private equity folks have a lot of ideas about what they can do with this with a declining business like that.
Isn't this an expensive way to get TV to people? Like, okay, if you can get TV to someone on their phone on
Hi,
YouTube
Mr.
TV.
Obvious. It's so nice to meet
Yeah,
you.
like,
Pleasure.
okay, or let's launch some rockets with satellites on them.
Hey.
Put dishes on our houses.
Put dishes on our houses.
Yeah.
Like, I mean,
it's a little antiquated.
It is very antiquated. It made sense for rural communities, back in the day. That's
still the only option. Yeah.
And you saw them everywhere. Like there was a point. I would even see them in my neighborhood.
Yeah, but it made
an urban environment.
Well, that's actually
years ago.
That's actually a really interesting point because there was a time, Scott, when it was competitive with wireline cable that was dug up and laid in the streets.
It was the Challenger. It was the one that disrupted the cable TV environment because they could do it from space for cheaper.
Right. Yeah. Right. And then Elon came in. When you think, we just have a couple of minutes left, but I think about this story. Like I said, we were all kind of scrambling to be like, wait a minute, I thought this happened already or whatever. When you look at AT&T and just the bigger, broader telecommunications world, what's kind of interesting to you at this point?
So there's this huge rush to get something going with 5G, and we've heard a lot about that term.
Shows up on my phone.
I know, right?
Does it
We all
mean
have that
something?
icon on the top of our phone.
Are you really getting 5G there?
I don't know.
That's a different conversation.
And if you are, what are you doing with it, right?
Yeah.
That's the whole question. And it hasn't been a real app that has made it worthwhile. So I think we're at an awkward stage right now in the wireless build-out where they've spent so much money building the 5G networks that can do things really fast, but there's nothing out there that needs that kind of bandwidth, which is a little bit odd because you would think we're moving into that stage where you would need a lot more bandwidth everywhere you go.
I'm sorry, I was told that surgeons would be able to do surgery robotically across the world when 5G was rolled out, or is that just one thing the companies told us so regulators would give them the spectrum?
Cars would drive themselves.
Yeah. I barely got here on a subway today.
Right. The hype has didn't prove to live up to the hype.
So is it just a case that the applications aren't there yet?
Right.
Or people aren't chasing those applications?
There has not been a killer application that makes it all worthwhile. The only thing that you can point to, I guess at this point as a success, is they can beam signals into homes with 5G that gives you a kind of a broadband connection that competes with landline.
So it does compete. Like you could stream Netflix all night long.
Yep. It has its limitations. It's still wireless, and there's not that much capacity.
But then you still have AT&T investing so much money into laying fiber.
Fiber's probably the hardest one to beat in terms of capacity in the future. Yeah.
So 5G is still not there.
5G's it is a step towards full.
I'm looking. Oh, it's not on my phone right now because I'm not getting a signal. It's not always there. That's all I'm going to say. Truly, when it comes to anything in the telecom world, we're like, we got to talk to Scott because you just have the bandwidth. No pun intended.
Oh, Carol.
I know. Sorry.
How dare you?
Don't beat me up. Thank you so much. As always, Scott Moritz, he's telecom reporter at Bloomberg News, on site with us here on the 6th floor link at Bloomberg headquarters. We're here because Bloomberg Live having their Sustainable Business Summit. I had a great conversation. You will either hear some of it tomorrow or a little bit later on.
Ooh, I'm looking forward to that.
How's that for a deep tease?
That sounds great.
Mr. Obvious.
Okay, thank you. Captain Obvious, I think is the term. Let's get a check now on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nancy.
Thanks, Tim. The Biden administration plans to construct roughly 17 miles of border barriers along the Rio Grande in Texas. That's one of the busiest spots for migrants coming from Mexico. The Department of Homeland Security says it will waive environmental and tribal land protections in order to speed up construction. This is a major reversal for President Biden, who vowed not to build 1 foot of a border wall. He was asked about that today.
Border wall, the money was appropriated for the border wall. I tried to get them to reappropriate it, to redirect that money. They didn't. They wouldn't. And in the meantime, there's nothing under the law other than they have to use the money for what it was appropriated. I can't stop that.
Do you believe the border wall works?
No.
The move by the administration comes as Republican lawmakers demand stricter security measures along the border as a condition of funding the government. Well, there are still barriers to women when it comes to promotions. We get more from Bloomberg's Karen Moscow.
A new report by Sheryl Sandberg's leanin.org and McKinsey shows for every 100 men promoted to a manager role in 2022, only 87 women received the same boost. That was up from 86 women in 2021. One reason for the gap, according to Sandberg, is men are promoted based on their potential, while women have to have already proven themselves as managers. The numbers were even worse for black women, who were promoted at the lowest rate in at least 5 years compared with men. Karen Moscow, Bloomberg Radio.
The man who sprayed a packed Brooklyn subway car with gunfire back in 2022 has received a life sentence. 10 people were wounded in the attack. Frank James pleaded guilty earlier this year to terrorism charges. Prosecutors say James spent years carefully planning the shooting to inflict maximum damage. When given a chance to speak before hearing his sentence, James said the mental health system had failed him. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We check the markets all day long here at Bloomberg, and I'm Steve Rappaport. The major indexes wading back into the red end of the pool with less than 20 minutes to go before the closing bell. The Dow, the NASDAQ, and the S&P 500 all red, but by less than 0.1%. Investors are getting a little worried about the jobs report that comes out tomorrow and what it could mean for interest rates. Let's get the latest from Bloomberg's Michael McKee.
207,000 jobless claims filed last week. This is not what we were really expecting. We thought the auto workers might start to show up in these numbers. 204,000 was the initially reported number in the prior week. The continuing claims numbers also lower, at least compared with the previous issue, 1,664,000 compared to 1,670,000.
That's Bloomberg's Michael McKee. Two-year yield is at 5.02%. We have the 10-year at 4.71%. COMEX gold, $1,833.90 an ounce. NYMEX crude oil, $82.47 a barrel. That is down more than 2%. The Japanese yen, 148.44 on the dollar. The euro, 105.48. British pound, 121.93. And that's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I don't want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. A little chilly on Wall Street today. You know, they were serving hot cocoa up here.
Yeah, the line was too long.
Marshmallows and everything.
Did you get some?
I did not,
Yeah,
because
neither
it's a
did I.
little warm outside.
It's toasty.
Let's talk about the temperature on Wall Street. Back with us is Alan Lance, Director of Research at LanceGlobal.com, President of Allen B. Lance Associates. He is once again with us from Toledo, Ohio. Alan, it is a little chilly on Wall Street, but not terrible. But, I mean, very chilly in the bond market this week. What's interesting about what we have seen, the dynamics of the trade over the last 4 or 5 days here?
Well, I think, Carol, investors are finally figuring out, that what it really means, the higher for longer aspect of what the Fed is talking about. And this summer we had talked and we had talked about where have all the bargains gone and high tide and our two end of June and end of July issues of the Lance letter. And I think that's what we're seeing now is the reality of that interest rates are going to be high for a while. And I think when we're getting those summer highs and all that euphoria, it was more investors were thinking that, interest rates are going to start going down by the end of the year or early 2024, and reality setting in that, we might have a stop in the increases in the hikes of rates, but they're not going to go down dramatically. And the market's got a ceiling on valuations, I think, from the higher end of the trading range until you see a concerted effort that interest rates might go down.
Well, let's talk. We'll get to the ceiling on the market in a second. But first, I want to ask what you think investors should be doing with all that cash, or what they are doing with all that cash. Money market funds that are paying over 5%, is that where they're going?
Yeah, that's a good question, Tim. We raised a lot of cash this summer. I mean, the valuation surged. I mean, we hadn't bought Tesla since 2015, and when we talked in December and it, breaking 115, we never thought we'd be buying Tesla again, but there were some extreme values. I don't know if the market will go down as much in the fourth quarter this year, but we see a lot of parallels from last year. I think as valuations go down here, you can accumulate good quality companies that have strong balance sheets that aren't reliant on the capital markets. But in the interim, I mean, we locked in J.P. Morgan 18-month CD at yield maturity 5.72%. And Treasuries.
That must feel pretty good.
What was the product?
It's amazing.
JP Morgan. Say
was the product?
Say what Tim's taking notes here.
Yeah, well, I'm just...
Alan, what was it?
The JP Morgan 18-month CD that we bought at a discount. So it was a coupon of 5.5, but because of the discount, the yield to maturity is 5.72. And we did that yesterday, and the treasuries are 5.5. Shorter term. We're not going 10-year. I still think there's risk there. It's not worth the yield, even though the 10-year has gone up a lot. But yeah, the incredible volatility in interest rates and even energy. I mean, look how much energy has gone down as interest rates have spiked up, and that's where it doesn't hurt to have cash and lock in at those rates. When we talked a year and 2 years ago, I mean, you couldn't get 1-2%. So why not get a guaranteed yield?
Alan, when my 20-year-old who's in college and there's money that she needs to have, she's overseas going to school, and it's like, I opened up a CD, guys, so that, I can get like 4% or 5% of my money that, I'm not going to need to tap a lot. Like, this is what she's telling me.
She's talking about that? Good for her.
So there's like a shift here in terms of mentality. But having said that, I sometimes feel like when it's the darkest, we have to start looking ahead to when there's a policy shift. And so when do we start to do that? Because I assume at some point the Fed's going to stop. And the Fed's going to, that higher for longer will run out, and then we need to think about a different environment, or should we not even be considering or contemplating that?
Well, there's no on and off, as as we've talked over the decades. So it's a situation where we're gradually buying. I mean, we bought 3 boring companies that I wouldn't even want to talk that much about, because you would think compared to what we were buying in January, the Teslas and the Ubers, at near lows.
Wait, you got to share. When you set us up like that, what were the boring companies? Can you tell us?
The companies hit new lows today, as far as U.S. Bancorp, USB, with a 6.25% dividend. Bristol Myers hit a new low today. It pays over 4%. Medtronic, again, very boring company, $75.50 a hit and 3.75% dividend. That's what we're starting to nibble on with our cash that we raised, over the summer at the highs. And if the market goes down like it did the fourth quarter last year, we'll get into the more cyclical companies that are volatile, that might not have the big dividends, but are just too attractive to pass up.
Okay, I got to go just back to the Fed, Carol, even though, we're talking about stocks.
No, it's okay.
If I go to
it
the
all goes
Bloomberg
back
terminal,
to the Fed right now.
It does. If I go to the
really
Bloomberg
does.
terminal, type Fed Go, I do a chart that shows a GP, the federal funds rate from 1971 all the way up to 2023.
That's perspective for you.
Well, the average, 4.93%. So my question for you, Alan,
Good question.
is what is a quote-unquote normal Fed funds rate?
Well, I think it's all predicated on what investors expect. And I think this summer, when you're seeing the highs, the expectation was that, this is an aberration and interest rates will go back down. People see, investors seem like they like to follow the trends, and interest rates, just like you were mentioning, Carol, with your daughter, I mean, they're so low that now, they see a higher rate, and it's like, this is great, because when interest rates go down low again, I've locked in at, 5.5% or whatever the case may be. Well, unfortunately, I think what reality coming in now is that, we might not have a decline in interest rates. And if we do, it might be for a negative reason, like a recession, right? So I think that's what investors are contemplating now, and where the challenges are, where you want to be selective but gradually buy. I don't think there's anything atypical to this. I mean, we kind of went through it last year at this time as well.
So all roads lead back to the Fed, but all roads maybe ultimately lead to a recession. Just got 30 seconds here. Should we at some point, it's going to happen, because that's just the way things go? It's all cyclical?
I think it's very hard a soft landing. We've got a lot of hurdles geopolitically, what's going on domestically, in the U.S., and inflation is still stubborn, and they want to get it to that 2%. So, I think, the reality is going to be that it's going to be a challenging environment, and the economy will slow down. And small companies and companies that are highly debt, reliant are going to really struggle in this environment. And that's why, a cautious approach is the best.
Yeah, it is an interesting environment, too, overall. And we really rely on voices like Alan Lance to work our way through it. Director of Research at lanceglobal.com. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Steve Rappaport. Amazon is reportedly cutting some employees among its communications staff, with workforce reduction happening across divisions and countries. More than 5% of the division will be affected. Meanwhile, Amazon is getting in on the race to space. Bloomberg's Lisa Mateo reports.
Steve, Amazon is set to launch its first 2 test satellites tomorrow in a race to build out a massive internet from space constellation to compete with SpaceX's Starlink. Amazon had hoped to have the satellites for Project Kuiper in space a year ago, but the project was delayed. The proto flight hopes to test out the company's ability to beam broadband internet from orbit. Steve?
Thanks, Lisa. Shares of Amazon currently down less than 1%. With the pandemic in the rearview mirror, jet setters are clamoring to get away, but your stay won't come cheap. Bloomberg's Erica Herskowitz explains.
If you plan to travel next year, get ready for higher rates at hotels. That's the prediction from American Express, whose global business travel report released today forecasts room rates in several big destinations will jump double-digit percentages in 2024. Tops for expected price gains is Buenos Aires, followed by Mumbai and Cairo. But also in the top 10 are Chicago and Boston, with rates projected to jump 12 to 13%, thanks in large part to rebounding business travel.
Thanks, Erica. General Motors says it presented a 6th contract offer to striking auto workers. Sources tell us new package shows progress on key issues. GM in an email says it's ready and willing to negotiate in good faith 24/7 to reach a deal. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
No, not the Jets. I'm not going to go there yet, but we're
Okay,
going to go to that
not
story in
yet.
a moment. Carol Messer along with Tim Stenivek, just a few minutes left in the trade. First of all, we do want to mention a headline that crossed the SEC suing Elon Musk in federal court in San Francisco to force the billionaire businessman to testify in the agency's probe investigation into his purchase of Twitter in 2022.
Yeah, the SEC investigation involves whether Musk violated securities laws in connection with last year's purchase of Twitter stock, as well as his statements in regulatory filings relating to the social media company. That's according to a filing on Thursday. The SEC said in the filing that Musk failed to appear for testimony last month in San Francisco.
Always interesting when it comes to all things Elon. Also interesting, another branch within the U.S. government. This time we're talking about the Department of Justice. Now we can say, not the Jets.
Yeah, the U.S. on Wednesday notifying FTX co-founder Sam Bankman-Fried that it's going after 2 luxury jets that prosecutors claim are the proceeds of the multi-billion-dollar fraud he's currently being tried for in Manhattan federal court.
A Bombardier Global 5000 BD.
That's a nice one.
700.
I will tell you that.
An Embraer Legacy also.
That's a nice one, too.
How do you know?
Because a private
How many
jet.
jets do you have?
I will tell you that a private jet is still a private jet.
I know it
so
is.
you can say it's a nice one after every private jet.
Yes, indeed. All right. So it's already the subject of litigation in FTX's massive Delaware bankruptcy case. A Bahamian charter airline claims it bought the planes last year for $28.4 million based on a handshake deal. Always get a contract, folks. Bring in the lawyers. But they said it was based on a handshake deal with Bankman-Fried.
Would you buy a private jet on a handshake deal?
Nor would I get financing from FTX, but apparently that was involved too.
U.S. Marshals seizing one of the jets, the Bombardier Global 5000, back in February. That's according to bankruptcy court filings. The charter company that Carol referenced still had the Embraer Legacy as of late last month, but said the U.S. government has threatened to seize that too.
Not the first time that the U.S. government has grabbed disputed assets in the wake of FTX's downfall, folks. Also, U.S. government officials seized a slug of Robinhood shares in January worth nearly $500 million that SBF, FTX, and BlockFi have all said they're entitled to. Again, how I talk about I need a whiteboard? I need a whiteboard with all of this.
No one from FTX even flew on these planes, Carol. They were for
That's because they were
Sam Bankman-Fried,
they were
his
sleeping
family,
on
friends, guests.
beanbag chairs, in the Bahamas, in that headquarters, that penthouse.
Wow.
Stick around, guys. The close is coming your way right here on Bloomberg Radio. Great.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:58 on Wall Street. We check the markets all day long at Bloomberg. I'm Steve Rappaport. We are about 90 seconds away from what will likely be a red finish on Wall Street. We have the S&P 500, the Dow, and the NASDAQ all down, albeit less than 0.25%. Investors are worried a hot job market will lead the Federal Reserve to raise interest rates next month, but Federal Reserve Bank of San Francisco President Mary Daly says policymakers can hold interest rates steady if the labor market and inflation continue to cool or financial conditions remain tight.
The welcome decline in inflation we've all been waiting for has come without significant deterioration in economic growth or the labor market. The economy and the labor market are slowing, but not severely or abruptly. And these developments have led market participants, businesses, and households to replace fears of recession with hopes for a soft landing.
Daly spoke earlier with Bloomberg's Lisa Abramowitz. Two-year yield at 5.01%, the 10-year 4.71%. COMEX gold, $1,834.50 an ounce. NYMEX crude oil trading at $82.44 per barrel. That is down more than 2%. Japanese yen 148.44 on the dollar, the euro 105.50, the British pound 121.95. We are inching closer now, 20 seconds to go before the end of the trading day here, and it has been mostly red. There were some positive moments, but the bell has tolled, and it looks like a red finish for the big three. The S&P 500 closing down less than 0.25%. The Dow down less than 0.1%. And the NASDAQ also down, that's less than 0.25%. Investors, again, are concerned about a hot job market and what that will do to interest rates as the Federal Reserve mulls another hike next month. And that is a Bloomberg Business Flash. I'm Steve Rappaport.
All right, Steve, thank you so much. Carol Massar along with Tim Stanovic live here at Bloomberg headquarters on Business Week. So delighted to have back with us Bloomberg News Markets reporter Abigail Doolittle. She's here on site with us. Another kind of interesting day, but I feel like we're kind of waiting till tomorrow. But talk to us about the trade and what stood out for you, Abigail.
Well, it stands out to me that we're barely moving here on the close after all the movement that we've had. Stocks are barely budging, just down ever so slightly for the Dow, the S&P 500, the NASDAQ. The NASDAQ 100 down a little bit more, down about 0.3%. So yesterday, of course, we had gains. The day before, we had a big decline. What's catching my attention is over the last 5 weeks, we now have stocks down, the longest losing streak of the year. This, of course, as yields are mainly going higher. Today, we have a little bit of a pause. Yesterday, we had a pause for yields and the dollar. But that is what the markets are really focused on, this idea that higher for longer and how high could we go. The other area that really has my attention right now, the oil market. I mean, oil out of nowhere is absolutely crashing. Last week at this time, oil hit a high of $95 per barrel.
We were talking a lot about higher oil prices.
Yeah, and I know that the question of the day on the morning program one day was, what are we going to do when it goes to $100 per barrel? Too far, too fast up, and then now we're seeing the reverse down. Now the question is, we're below the 50-day moving average. Does support catch in? I tend to think that it's probably, I think more weaknesses ahead. And then if you think back to time periods, and it often happens in the spring where you have oil or the other commodities sell off, stocks then follow. We, of course, had the worst September of the year, the worst quarter of the year, but there may be reason to think that we're going to have some weakness ahead for stocks based on this volatility for oil.
Okay, so let's connect that back to the S&P 500.
Sure.
What are you looking at with technicals there in terms of, what could be coming?
So I'm waiting to see whether or not the S&P 500 does what the Russell 2000 has done, what the S&P 500 equal weighted has done, and that is go below the 200-day moving average. I would be really, really surprised if it did not. And when we bring oil back into that picture, I was just speaking with Doug Krisner a few moments ago, and we were talking about, he was really talking about the idea that when you go long oil, that's short bonds essentially. So when oil was going higher, it was telling you that yields were going to go, were likely going higher, which would press stocks. We now have oil kind of doing the reverse. Are we going to see some relief in the form of yields coming in and stocks down or stocks higher? I'm not so sure. That jobs number will also be a little bit critical.
Do you feel like every day the sentiment can swing pretty rapidly based on the economic data points, or are the trend lines pretty consistent?
I don't think that the sentiment is so much swinging, but there is a fair amount of volatility on an intraday basis here for a lot of different asset classes, but especially stocks in particular. And I think it's more, I don't think it's so much sentiment, I think it's more uncertainty. And I think it's also traders finally getting used to this idea or reconciling this idea of higher for longer.
So when we think about this in the context of I don't know. I mean, it's when we think about it in the context of oil prices and why we've seen oil prices fall quickly. Why has that happened?
Too far, too fast. I mean, we went
But
like
it's
just
purely
a couple,
technical.
I
Because
don't
the
know.
story last week was all supply.
Well, it's funny. So the story's been, because I've said it many times on air for many, many weeks, is that we have oil climbing because OPEC Plus is holding pat with their cuts. I think just too far, too fast. Up 39% in just a few months. This as the dollar was also climbing, which is not a normal situation. So really getting, from a technical perspective, getting far from the 50-day moving average, the 200-day moving average, to the different levels of time frame buyers. Now we're back below that 50-day moving average. But I think that Doug makes a really good point that if you wanted to express
Doug
a short,
always makes a good
he
point.
makes great points. If you wanted to express a short on bonds, one way to do it would be to go long oil as a different tell on inflation.
That's a really interesting trade there,
Yeah,
right?
it
To
is.
think about the approach to the market. What kind of volume have we had in terms of this trade?
Okay, so today I actually have not checked because it's been so much of a snoozer. But recently we've actually had above average volume, above the 20-day average for the S&P 500
So
by
there's
5
been
or 10.
some support to this kind of downward
yeah,
momentum?
it's a little bit serious. And also, if you look at the breadth on the S&P 500, 90% of the S&P 500 members below the 50-day moving average. So it has support on this weakness that we've had has support on multiple levels.
At one point today, we were down as much as close to 0.9% on the S&P 500. Do we know why there was a reversal?
I don't, frankly.
I couldn't
because
find it either.
Yeah, I mean, bond yields. The only thing I could think of is as oil goes lower, it does suggest, because I'm actually in the chart package tonight I'm going to send out, it does really suggest that as oil goes lower, yields probably go lower. So maybe some traders betting on that. It could also be ahead of jobs, just some volatility ahead of the jobs report. What is it going to come out? I mean, to me right now, it looks a little bit like a snooze jobs report because it's expected to come in like around 170 or so.
Yeah.
That's basically in line with the August number. Maybe some traders were briefly looking for something different.
Well, we were talking to Michael McKee earlier, and he said the whispers for something closer to 190,000.
A bit stronger.
A little bit strong.
Yeah.
I don't think that would do too much. I think anything between 150 and 200 is going to be in line, and then above and then below.
I think what it does, at least for me, is I still, people say over and over again, hard landing, we're headed for a recession. The U.S. economy is still adding close to 200,000 jobs every month, and it's a hard case to make.
It's a hard case to make, but on the other hand, if rates stay higher like this, I would have to say at some point it's going to take a bite into the consumer. 2/3 of savings. You've got the student loan repayment coming on.
Yeah.
Credit card delinquencies are at an all-time high. Savings are basically gone. I don't know. We don't know yet, but I think that there are some data points suggesting. Also, the longer that the Fed, Jeff Gundlach actually yesterday on Twitter was making a great point of double line. He was saying that the yield curve has come uninverted so quickly that definitely that's like sort of the tip off ahead of a recession.
Well,
It's like
we talked about that earlier.
This is what John Authors, did you?
Oh,
his
I
column,
did, actually.
But it's interesting. He talks about that and that, the precursor to a recession. We are getting close to earnings. I'm thinking about JP Morgan. It's not that far away. What about a week and a half or
Yeah,
so?
it's amazing.
Financials have gotten beaten up this year.
Yeah, they have.
When you look at individual sector groups, are you thinking about financials? Are you thinking about transport? Some different things that could tell us a little bit more about kind of more broadly the macro situation.
Yeah, well, the financials always kick it off, so we want to hear what goes on there. I'm thinking about, we've had some pre-announcements today. I mean, Clorox, that had to do with a hack, but also Rivian. So maybe idiosyncratic stories, but when you start to have some pre-announcements to the downside on sales, I think that you want to think about the idea that maybe it's going to be a cautious earnings season. And then as much as I want to think about financials, more so big tech, because big tech, that Magnificent Seven, I just had Steve Sosnick
We
on.
saw investors buying into it on the dip. Was it yesterday?
Well, it's so funny because Steve Sosnick said right now the correlation in terms of these 7 stocks moving together on up days and down days is huge. If there's an issue and people start to dump them, it could really tear apart the market. The equal-weighted S&P 500 is down 3% on the year. The S&P 500 is up, I think, 7 or 8%. So you have that divide. It's a worrisome. I think that tech would be the sector I'll be watching most.
That's really interesting. I
earnings
mean, it's
season. Yeah.
one thing that I was shocked to see
I
recently,
agree.
Abigail, is just what you're saying, that so many of the companies in the S&P 500 have had a negative year. There's only a handful of them that have actually powered all the gains. It's like this every year.
Yeah, it's like what is it, like 30 or 40% of the S&P 5. The Nasdaq 100 is like 100 or 100%. It's 50% or thereabouts.
Since you said tomorrow's jobs report, last question, is going to be a snooze report.
Well, that's just what it looks like when I see it in eco. It's just kind of like.
So probably not going to see a significant trade unless it really comes in very differently.
Well, yes, if it comes in above 200, 250, 300, I think that we could see the market sell off. Good news is bad news. If it's the reverse, maybe we're going to get a little bit of a rally and we see yields come back in, which is what oil is maybe telling us. So stay tuned.
All right, we are set up for tomorrow. Thank you so much, as always. Bloomberg News Markets reporter Abigail Doolittle. Be sure to check her out on Twitter. And, of course, you can get the latest right through on more of the trade right on the Bloomberg terminal. This is Bloomberg Radio. In Bloomberg headquarters. The link is so important because it just means everybody from all different departments, all walks of life here at Bloomberg, the culture comes together. And I feel like that's a fitting kind of backdrop and thought for our next guest, because with us right now is Gideon Maltz. He's the CEO at Tent Partnership for Refugees. It's a nonprofit that mobilizes the business community to really improve the lives and livelihoods of refugees all over the world. And man, they work with a lot of well-known companies too.
Yeah, they've got 300 members, includes Amazon, H&M, Adidas, Hilton, L'Oreal, Pfizer, and more, Carol. It was founded by someone who understands what it's like to be a migrant, somebody who you spoke to earlier today.
Hamdi Ulukaya, who of course is the founder and CEO of Chobani. So great setup for me personally in terms of this conversation. Gideon, thank you so much, and thank you for joining us on Bloomberg Business Week. Hamdi and I talked a little bit about it in front of the audience about the importance of refugees. Talk to us, though, a little bit about more broadly what your organization, what you're doing specifically, and as you work with other companies. Welcome, welcome.
Thank you so much. Thank you so much for having me. So we at Tent are laser focused on getting refugees into jobs. We think that is the most important milestone in a refugee's new life. They want to provide for themselves, for their families, integrate in the new community. And we think that is what businesses have the most to contribute in terms of helping refugees. So rather than seeing it as charity, we want companies to see refugees as some of the most amazing, dedicated, motivated workers. And if they're willing to make a small investment, they can bring them into their workforce, fill labor shortages, motivate their workforce, and really see a business dividend.
Refugees versus immigrants or migrants. And this is something I actually talked with Hamdi a little bit and his team. I mean, there is a distinction. Talk to us about who refugees are, what they are escaping, and just give us a little bit of background.
Yeah, absolutely. So the term refugee has a very specific meaning in US law, but when we talk about refugees, what we mean are people who have been forced to flee their home country. They didn't leave voluntarily. So they are people who are fleeing persecution in Cuba. Mm-hmm. They're people who are fleeing an unjust and brutal regime in Venezuela. They're people who may be fleeing the Taliban in Afghanistan. They have been forced to flee and to seek a new life. And that is the concept of a refugee or someone who's forcibly displaced.
How is that different than the legal definition?
So in the US, refugee applies to a very particular type of person who is identified outside of the United States and brought in through a very complicated legal procedure. Someone who shows up at the border and is then judged to have that status is called an asylee. Tend to amount to the same thing, but under US law, refugee has a very contained meaning.
So you're more using the concept of asylum seeker.
Yes.
Okay.
Yeah. Asylum seeker, people who are coming to the country because they have been forced to leave their own.
In terms of, it's very political, it's very divisive. Certainly you see some of the discussions that happen here in the United States among lawmakers and just individuals, U.S. citizens. But when you see like some of the situations that are going on in New York, talk to us about the work that you guys are doing specifically in a state like here or a city like here.
Yeah, absolutely. So just to say...
And does the division and the political craziness make you a little frustrated?
It does. It does. I mean, just for context, New York is now hosting 100,000 asylum seekers and other migrants. The country of Colombia has been hosting 2 million Venezuelans. It has the GDP that is 1/10 of New York and has been doing so with much less drama than we've heard in New York the last week or two. So this is a solvable issue. So yes, it makes me frustrated when I hear people talking about how difficult it is, because it's not.
How do you solve it?
So the way we solve it is these are folks who are all looking to work at a time that America's biggest companies are desperate for labor. So the way you solve it is by more effectively, quickly, rapidly connecting them to jobs so they can take care of themselves.
I mean, it sounds simple, but let's be honest. This is not simple.
The holdup right now is that many of the individuals who are in New York right now aren't yet legally authorized to work. So the US government has actually significantly accelerated the process of allowing them to work. And what TENT, my organization, has done is trying to better connect these individuals to companies. Because right now there's an information gap. These folks are looking for jobs, companies are looking for employees, but they're not meeting.
But one thing that's been challenging here in New York is finding places for these people to live. And I know that comes with getting a job and finding your own place, but this is New York City where it's really tough to find a place to live even if you do have a high-paying job.
Absolutely. You know, we are registering a lot of these folks to look for offers for them, and we ask them, are you willing to relocate for a decent job? 2/3 say yes. And so part of the solution here is going to be helping them fill labor shortages. Maybe it's in meat processing plants in Arkansas, maybe it's in hotels in Illinois. The jobs aren't always evenly distributed with where asylum seekers are, but they're very willing to move to where those jobs are.
Talk to us about some of the companies that are involved with you guys, because it's pretty impressive.
Yeah, absolutely. So, I mean, we work with amazing brands, whether it's Pfizer or Tyson's or Amazon or Hilton. And these are all companies that are meaningfully investing in the refugee talent. So it's not just about hiring them, they're actually thinking through their systems. How do we make sure we're not excluding qualified people? How do we make sure that people who may not be fluent in English, we're sort of adjusting our work process to accommodate them, knowing that they're going to speak English in a few months.
Gideon, what's the success story? What's a typical success story that comes out of TENT? Give me an idea of how it works. Because we talk about the importance of diversifying, workforces, and a lot of times entry level, you get that diversified workforce, but as it goes up the ladder or holding on to those people, it doesn't always fall through, or it does fall through, rather, I should say. So what are you guys seeing? What is the success?
Yeah, absolutely. So, look, refugees come from every single background with every single sort of conceivable talent. So for some of them, working at that hotel desk is like the best job ever. Some of them were Air Force pilots in Afghanistan. And we have, stories of Afghans who fought alongside US military forces in Afghanistan, who forced to flee and are now training to be a pilot at American Airlines, or are working on procurement at Pfizer, and are sort of starting their lives all over again.
That's always amazing things. One of my favorite things used to be getting into like a New York cab, and it was people from all over the world, and being like, well, I was a doctor, or I was this. And it always shocked me that the inability to be able to start doing that here. So how do you guys help that, work those individuals who were professionals in their home country?
Yeah, absolutely. Part of this is persuading big employers to recognize that talent. So maybe they get hired for a junior role at a hotel, but then they get promoted 5 times because that, Hilton is recognizing their talent. One of the other things we do is provide professional mentorship, where we persuade big companies, their employee resource groups, to provide professional one-on-one mentorship with individuals so that, the person who is a pharmacist in Afghanistan can find the right role for themselves in the United States.
Gideon, give me some stats. Talk about impact here. I mean, this is such a huge issue here in the U.S. with so many people coming here. Are you making a dent?
Absolutely. So exactly a year ago, we had 45 of America's biggest employers committing to hire more than 20,000 refugees over 3 years. More than, just over 1 year later, they've already hired well over 10,000 refugees, just those companies. I think we can do an order of magnitude bigger as we get more momentum. So I think we can get to a point where every asylum seeker, every migrant, every refugee coming to the United States, fills a job that the American economy needs.
Is there a message you want to send to anybody who's listening, or leaders of companies?
Yeah, absolutely. If you work at a company, if you work especially in HR, reach out to us at info@tent.org, and we will give you the most motivated, dedicated workers.
I got to say, and I know Hamdi talked with me too about the impact that it has certainly on his company. It's culture, but it's so much more. So really great to hear from you, and I hope you'll keep us up to date as things progress. And this is obviously a situation that is out there. Gideon Maltz, he's the Chief Executive Officer at Tent Partnership for Refugees, joining us here at the Bloomberg Sustainable Summit in New York City. You are listening and watching Bloomberg Business Week, and if you missed, because Gideon was on a panel Bloomberg Live, and you're going to be able to download that stuff. You just head to BloombergLive.com.
Was he on your panel too?
He wasn't on my panel. I talked with Hamdi, but they did a panel afterwards and talking about the importance of refugees in terms of labor market and just, it's also part of like kind of helping the world and doing the right thing. You are listening and watching Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We check the markets every hour here on Bloomberg. I'm Steve Rappaport. The bell has rung, and Wall Street is closed for the day. It's a red finish for all three of the major indexes. The S&P 500 lost 6 points to close at down less than 0.25%. The Dow Jones relatively flat, down 10 points. The NASDAQ down 16, less than 0.25% loss there. It was mostly red through the day with a couple of sparks of green. What happened? Well, glad you asked. Investors were worried about the upcoming jobs report from the Labor Department tomorrow. That's also after the Labor Department released numbers regarding first-time weekly jobless claims. Those were up more than expected at 207,000 last week. But They are still at historically low levels. As for the September jobs report, stay tuned to Bloomberg Radio for that tomorrow at 8:30 a.m. Wall Street time. Two-year yield, 5.02%. The 10-year yield finishing at 4.71%. COMEX gold, $1,833.70 an ounce. NYMEX crude, 82.44 a barrel. That is down more than 2%. The Japanese yen, 148.49 on the dollar. The euro, 105.50. British pound, 121.91. And that is a Bloomberg Business Flash. I'm Steve Rappaport.
Hey, Steve, thanks so much for that update. Really do appreciate it. Get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
All right, we got a great guest coming up, but we want to do a little bit of a setup here because there was a story crossing late yesterday. The notorious group of hackers blamed for recent breaches on major casino companies is also suspected of being behind a recent cyber attack against Clorox that has led to a nationwide shortage of its cleaning products.
Okay, there's called Scattered Spider. It's known for its so-called social engineering tactics. It was tied to those attacks that Carol mentioned. These hackers, Carol, specialize in targeting call centers and IT help desks.
Which
they
just
impersonate
terrifies
employees
me.
to trick support staff into coughing up information to gain access to accounts. Social engineering.
I am terrified. We've got an expert on identity and access management. In other words, making sure that the right people are on a system and who are on a system are accessing the right information and the wrong people are not. So let's get to it. And so delighted to have back with us Todd McKinnon. He's co-founder and chief executive officer at Okta. He's with us on Zoom in San Francisco. Todd, how are you?
I'm doing very well, Carol. Thanks for having me on Bloomberg Radio. It's nice to be here with you.
Well, it's great to have you here. We want to talk about these attacks, but you know, we're Bloomberg, and you know I'm going to ask you this. How's business? How's the environment? What are you seeing? Because we, day in, day out, are talking about soft landing, not soft landing, higher rates for longer, the impact on companies, their debt levels, their earnings, trajectory. So how do you see it?
Well, I think it's definitely a different world economically than it was a few years ago when interest rates were zero and everything was growth at all costs. I think really what we're in now is the new normal. It's frankly a more sane normal, and CEOs and boards and management teams across the industry are thinking how they can do more with less, how they can make their dollars reach further, and how their projects are really going to pay off. And we're definitely operating like that at Okta. And within our customer base, we're lucky enough to offer a set of identity services across both workforce and customer identity that really help them be secure, help them be more productive, grow their businesses, and do it all in an efficient way.
How are you seeing customers adjust to this higher rate environment? Like, what are different things that you're dealing with when it comes to customers? What are you hearing from your sales staff right now?
Well, just in terms of like the ROI that customers expect on projects, I think the bar is higher. They know that they're trying to stretch their budget dollars further. So if they're going to fund a project, it's got to really pay off. And it's got to pay off with real monetary benefits and return benefits. And it can't be like, oh, it's going to pay off in 10 years. It's got to pay off in 1 or 2 or 3 years. And when you talk about what we're doing with our customer identity cloud, we can actually help customers drive more revenue by providing better digital experience for their customers. And on the cyber side, everyone knows that the cyber environment is a very, very important battleground for companies and attackers. And our products and our solutions help companies move to this new world of cloud computing and remote work and do it in a way that has a solid foundation of identity, which keeps it all secure.
So when there's a headline, either Caesars or Clorox, do your phones kind of light up a little bit?
Well, we can talk about the specifics of any attack at any point in time, but the reality is that these attacks happen all the time, and every customer and every company is under constant attack. We've digitized so much information and so many processes, and that has tremendous benefits, but it also comes with risks and a rising bar to make it all secure. So the first thing we do is we make sure that our products are built to keep customers secure. And when there is an issue, we really lean in and help our customers understand the complexity of the environment, because the reality is that one of the reasons why this is so scary to customers and users is because it's kind of hard to understand. And identity management and social engineering and the attacks are evolving and the adversaries are getting better. And one thing the entire industry does, and Okta in particular, is we're really leaning forward to help our customers understand the complexity and understand the best practices, what works and what doesn't. And as the attacks progress and advance and morph to take advantage of all the opportunities, we're right there with them to protect them.
Todd, when you talk about these companies wanting to see an ROI and the bar higher being, for ROI, how do you show them that in the context of, you're preventing something from happening. You're not actually like giving them something, right? You're preventing something from happening.
Insurance, right?
Yeah, but I mean, how do you measure that?
It's a really important conversation, and when we talk about return, there's hard return, like that's really demonstrable, and then there's soft return. And one of the things we've seen is really a more demanding of hard return. And so with our products, if you're going to launch a new product that can drive new revenue, a new web experience, a new support experience that can maybe a premium priced offering or another edition of your product or a whole new route to market, you can sell your products online. That experience, to make that a compelling experience that attracts users and retains users and sells more of your products to users, that's an identity-based experience. And you have to know who the person is, it has to be secure, but that's a very hard ROI. And you mentioned the example of cyber insurance, that's a very hard ROI in terms of cyber. You can save money on your cyber insurance by having a solid foundation for identity and solid foundation for security. So when people talk about ROI, it's not just talking about ROI, it's what's the hard ROI and how do you really quantify that for customers?
Okay, so, I'm wondering about how boards of directors are thinking about these types of risks now. I mean, it's not difficult to find a headline where a company has been compromised. What are you seeing change in the proportion of how much companies are spending on cybersecurity in order to prevent things like, what happened at Clorox and what happened at Caesars and MGM? Like, how has that shifted?
The main way it shifted over the last 5 years is that every board of directors in the world knows about cyber now. If you went 10 years ago, 15 years ago, and just looked at the agenda of board meetings, it would be few and far between where you saw a cyber risk committee or you saw a cyber topic on the agenda. Maybe it would be a tech company that had that, or maybe it would be a company that was in the cyber industry. That's very different now. Every board thinks about cyber and cyber risk, and they know that so much information is digitized and the risks of cyber is so much higher. They're there to address that risk. And remember, a huge part of a board's responsibility is risk mitigation. So boards are very tuned into cyber risk these days. I think the next level that Okta as a company and that our industry can take is make sure boards understand the importance of identity to cyber risk. Identity controls not only your customer-facing apps and how they can be logged into and the security posture there, but all of your internal operations, whether it's running your data centers or running your business applications or your governance and risk attestation around all of the access controls in your internal systems. That's all an identity problem. And at Okta, we're the largest independent neutral identity company that can provide products and services across all of those use cases. So it's within cyber, elevating the consciousness of identity to boards of directors. And as we continue to have success and get our message out there, more and more boards realize that it's not just cyber,
Right.
it's identity. Cyber.
Todd, just got about a minute left here, and I'll be honest with you, I feel like these two subjects come up all the time, and I'm talking about AI and also jobs, because we have the jobs report tomorrow. I'm going to go with jobs just because we are laser focused this week. We've already had a couple of reads that, it's not all necessarily the same trend line. What are you seeing specifically when it comes to hiring patterns, demands? Is the labor force softening? Give us a snapshot of what you guys are seeing.
I think it's, and broadly speaking in the economy, it's kind of reflective of what the economic data, we're seeing what the economic data broadly is reflecting, is that there's a lot of people thinking that jobs are going to contract and that it's recessionary, but the jobs reports keep coming out that we're adding more jobs, and the U.S. seems to be on a path to growth this year, and so it's, not recessionary, but people are cautious. And then you go back to the technology industry specifically, it's very clear in the technology industry specifically that jobs have been cut since last year, and that technology companies are trying to do more with less, trying to be more effective with the workforces they have, try to optimize their labor pools on the most important trends and the most important opportunities. And I think that's, like I said before, it's kind of the new normal, and I think overall focus thing.
So 10 seconds. Does that mean you're hiring? You're slowing your hiring, or what? Just quickly.
We are hiring.
Okay.
There it is.
All right, you were quick. Todd, thank you so much. I know busy times, and we always appreciate when you come on to join us and give us some perspective. Be well. Todd McKinnon, he's co-founder and chief executive officer at Okta, joining us there on Zoom in San Francisco.
Let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. White House Press Secretary Karine Jean-Pierre says the administration was left with no choice but to move forward with construction of about 20 miles of border wall, even though they still do not think it's effective. She says the money needed to be spent by the end of 2023.
These funds were appropriated in fiscal year 2019 under Republican leadership, and DHS is required by law to use the funds for appropriated purpose.
Jean-Pierre says the president's stance on the border wall has not changed. He says he still does not believe it works. The border was the central focus today when U.S. leaders met with their Mexican counterparts. Homeland Security Secretary Alejandro Mayorkas on their discussions.
Today's high-level security dialogue is the first to include migration as part of its agenda, an essential component of our national and regional security.
Mayorkas says concrete steps were taken today to better address threats. More details are coming out about the August plane crash that claimed the life of Russian mercenary chief Yevgeny Prigozhin. Russian President Vladimir Putin says fragments of a hand grenade have been found in the bodies of several of those who died in the crash. All 10 people on board died. Putin says the investigation into the cause is ongoing, but his statement appears to hint that an accidental grenade explosion was to blame. Well, the man who tossed a hand grenade into a Brooklyn subway car back in 2022 and then started shooting learned his fate today. A New York judge sentenced Frank James to 10 life sentences with 10 extra years. 10 people were injured in that attack. James spoke before hearing his sentence and said the shootings were a cowardly act of senseless violence of his own doing. He also said the mental health system failed him. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. I'm Steve Rappaport. We check the markets all day long at Bloomberg. We have a red finish where stocks and bonds backed away from the worst of this week's slump, though key data Friday threatens to spur a fresh slide. U.S. equity benchmarks ended the day pointing lower after the latest data showed weekly unemployment claims holding near historical lows. That was 207,000 for last week, according to the Labor Department. Checking those numbers now, the Dow lost 10 points, the NASDAQ gave back 16, the S&P 500 shed 6. As investors await that big jobs report coming from the Labor Department tomorrow, we'll have it for you right here at 8:30 a.m. Wall Street time. Tune into Bloomberg Radio for the latest on those numbers. Investors are worried that the hot job market will tempt the Federal Reserve to raise interest rates next month. Federal Reserve Bank of San Francisco President Mary Daly.
My job as I see it, our job as I see it, is not to tighten, just do our part. It's to watch financial conditions, because monetary policy works. We raise the funds rate, and it moves through all the other interest rates. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Daly spoke earlier with Bloomberg's Lisa Abramowitz. The Federal Reserve at its last policy meeting left its benchmark rate in place at a range of 5.25% to 5.5%. Checking yields, we have the 2-year at 5.02%, the 10-year finishing at 4.71%. COMEX gold, $1833.90 an ounce. NYMEX crude, $82.55 a barrel. That is down less than 2%. The Japanese yen, 148.50 on the dollar. The euro, 105.50. The British pound, 121.91. And that is a Bloomberg Business Flash.
It is indeed. All right. Steve, thank you so much. Really appreciate it. Hey, you are listening and watching Bloomberg Business Week on this Thursday. Carol Master along with Tim Stanovic. And I got to say, I'm obsessed with this story that has been among the most read on the Bloomberg. It's about a startup that just listed on the Canadian Securities Exchange with a business model based on a provocative prediction, and that is legal cocaine. It's coming.
What?
What?
Okay, the company's called Safe Supply Streaming. It's the company. It's betting on a so-called third wave of policy changes that would decriminalize hard drugs, following similar measures making cannabis and psychedelics more mainstream. It plans to acquire companies that could benefit. You can check out the full story at Bloomberg.
Like I said, it's a most read. Hey, meantime, our next guest has a gut check for us on the rise of addiction, specifically binge drinking and drug use among those ages 35 to 50. Let's get to it. Renee Johnson is with us, Associate Professor in the Department of Mental Health at the Johns Hopkins Bloomberg School of Public Health. Of course, as you know, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Renee is joining us on Zoom from Baltimore. Renee, welcome to Bloomberg Business Week. Tell us about what you guys are seeing. And there was some research done. Tell us a little bit about the findings.
Well, hello. Glad to be here. So some of the findings are an increase in cannabis use among adults aged 19 to 50.
Why is that concerning?
Well, one aspect to answer your question is, why is that existing? And the answer is that there's been a lot of changes in drug use in previous decades. Part of it is about demographic shifts. People are getting married later, having children later. More people live with roommates. More adults aged 25 to 34 are living with roommates or their own parents that are living with spouses or children. And this sort of creates an environment conducive to drug use. Living on your own without the responsibility of maintaining a home or raising children means that there's more time for recreation, and recreation often includes the use of alcohol, cannabis, or other drugs.
My question wasn't why is it existing, it's why is it concerning to you? If cannabis is legal in many places or decriminalized in many, why is it concerning? And I'm also wondering if maybe it's just measured differently now. Just playing devil's advocate here.
Sure. I mean, I think that there may be some cause for concern, but not necessarily. What we would want to know to make such a determination would be information about frequency of use. So we would be much more worried if there were substantial increases in daily use, for example. But we're really seeing the increases in folks who report any use in the past year or use in the past month. So less cause for concern there. We'd also be concerned if cannabis was a part of a pattern of regular and frequent use of multiple drugs and alcohol. That's when it might be worse, but that doesn't appear to be the case. And then
Yeah,
finally,
that's what I was wondering about the kind of linking, right? If we're seeing both increased cannabis use and increased drinking, but that wasn't necessarily a finding. Is that correct?
Yeah, there's a lot more stability with drinking than there has been with cannabis use. So cannabis is on the increase, and alcohol use has remained fairly stable.
That's interesting. I've read some reports of people in their mid-30s and young adults drinking less now.
There has been, it depends on what you compare it to, but there is a secular trend toward less drinking. And we have decades of alcohol control policies to thank for that. There's really been like historic lows in drinking among adolescents.
Which is great to
That's
hear.
interesting to
which
hear.
Is
That is
great to hear. You know, Renee, one thing I do wonder, and I feel like, yeah, absolutely. Well, why do you think that's happened?
Oh, I think it's no doubt alcohol control policies. There's also, if you think about the culture of adolescents today, there is much more parental supervision, you know, and during our generation, we just went out and hung out with folks. Now there's play dates and sort of arranged, planned outings with friends, and that's a real difference. So we see this with declines in use across all substances, including alcohol.
I am also curious. You know, one of the things I think we thought a lot about too with the legalization of cannabis is the impact on the workforce. You know, what workers had to or employers had to think about. You know, if you have a worker who's, you know, using cannabis or, you know, and then on a factory floor, and like, what are the concerns there? So I'm curious if this research or you guys in your analysis takes it out the next step in terms of what impact, if any, it's having on the labor force, the workforce.
Well, it's a good question. A smaller and smaller proportion of Americans are working in jobs where some sort of like physical impairment would result in injury. But certainly you need to think about that for jobs where people are driving or operating machinery. I would say that one thing we should be thinking about in terms of jobs and hiring is drug testing to get jobs. Many jobs in many states, even though cannabis is legal, require a negative screen for cannabis to hire people. And that can have a serious negative impact on people not getting jobs if they have used cannabis. And we know that employment and jobs are a critical factor in reducing and eliminating drug use. So it's important that workplaces have programs to support reducing or eliminating drug use. It's important to think about our hiring practices as well.
Yeah, especially since I feel like I talk to a lot of folks, and they're like, yeah, just to go to sleep, or like...
Especially in places where it's legal.
Yeah, exactly. So you just, you know, you wonder how we kind of find our way through it.
What is surprising to me, Carol, is how in New York City it smells like pot everywhere. And, you know, alcohol is legal for adults, but you don't see people drinking everywhere. There's just something different.
Unless it's St. Patty's Day here in New York City. No, but I agree. I come in and out of the trains here, and I'm like, it's kind of a waft of smell and smoke, and I guess some people like it. I
don't love
personally
it.
don't like it.
Yeah, you can tell.
Renee, thank you so much. Really appreciate it. Renee Johnson, Associate Professor in the Department of Mental Health over at Johns Hopkins Bloomberg School of Public Health. Of course, you know, supported by Michael R. Bloomberg. You're listening and watching Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Steve Rappaport. Amazon is set to launch its first 2 test satellites tomorrow in a race to build out a massive internet from space constellation to compete with SpaceX's Starlink. Amazon had hoped to have the satellites for Project Kuiper in space a year ago, but that project was ultimately delayed. Shares of Amazon closing down less than 1%. Falling used car prices are leaving many owners owing more on their auto loan than the vehicle is worth. Edmunds says the average underwater loan was nearly $6,000 in the red last month. Hyundai and Kia plan to adopt Tesla's North American charging standard to power up their electric vehicles. Those companies will now have access to the huge network of thousands of chargers all throughout North America that belong to Tesla. They are accessible to the point that other car companies, Ford, GM, and more, have all signed on for what is known as that North American Charging Alliance. Sticking with autos, General Motors says it presented a 6th contract offer to striking auto workers. Sources tell us the new packages show some progress on key issues. GM in an email said it's ready and willing to negotiate in good faith 24/7 to reach an agreement. UAW President Shawn Fain will provide an update on the status of negotiations with Detroit's Big Three. That will be tomorrow morning. Shares of GM closing down more than 2%. Ford stock down less than 1%, while Stellantis was up less than 1%. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenivek and Carol Masser. We're live from the Bloomberg Sustainability Summit right here in New York City. Let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nancy.
Hey, Tim. Well, the gunman who opened fire on a packed Brooklyn subway car during rush hour in 2022 has been sentenced to 10 life sentences, one for each of the victims wounded in the attack. Frank James pleaded guilty to 10 counts of terrorism back in January. U.S. Attorney Breon Peace says this was a very calculated crime.
He purchased smoke bombs, disguises, and guns. In the weeks leading up to the attack, he scouted the location for his attack. He completed multiple practice runs.
Peace says 16 of the 32 shots fired hit innocent victims. James spoke ahead of his sentencing and said the mental health system had failed him. The campaign for House Speaker is in full swing with less than a week before the first vote. 2 candidates have announced their interest: House Majority Leader Steve Scalise and Congressman Jim Jordan. Democratic Congressman Brad Sherman of California says his party wants Hakeem Jeffries, but speculates on who will actually win the job.
I wouldn't be surprised if it ends up being Scalise in the number 1 position and Jordan in the number 2 position. I also wouldn't be surprised if we have continuing chaos.
Congressman Brad Sherman spoke on Bloomberg Sound On. The first vote for Speaker is set for next Wednesday. Well, the ouster of Kevin McCarthy has Democrats looking to take political and monetary advantage.
More than 20 congressional Democrats sent out fundraising emails after they joined with 8 Republicans this week to toss McCarthy from the Speaker's chair. President Biden joined in the fray as well, saying in his own campaign email that Republicans like Marjorie Taylor Greene are floating former President Trump as a speaker. Republican Congressman Matt Gaetz fired off his own fundraising emails as well. He spearheaded the effort to remove McCarthy and slammed the former speaker for working with Democrats to keep the government open. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Tim and Carol.
All right. Thank you so much. Nancy Lyons there in D.C. I'm Carol Masser along with Tim Stenivek. Just taking a look at some of the stories, and it's interesting. I feel like all of these weight loss drugs.
Every day, another story.
Exactly. And there's been a couple this week. Walmart and also the maker of Pringles coming out, how they're studying them. Walmart really analyzing the shopping patterns of individuals and finding that people are maybe buying less. And
food to eat.
Right, because of...
Is that a bad thing?
Diet drugs. I don't think so. It's interesting.
Maybe if you're Walmart or if you're the maker of Pringles.
It's something I talked about with the CEO and founder of Chobani at the Sustainable Business Summit. And he kind of went into about how food is made. And right now you have some major consumer product companies that make the bulk of what we eat. And talking about that maybe we need to rethink the system a little bit, basically.
Well, speaking of rethinking the system, Carol, the system for weight loss drugs is what we're talking about.
Yeah, sorry. And I went on a ramble.
That's okay. That's okay. I'm just trying to get you back on track. That's what I do here.
Focus, Masser.
This story about Madison Muller, who I've been speaking a lot to about the weight loss drugs here in the U.S.
Have been.
Yeah. I'm really interested in what's going on here. So Novo Nordisk, and I shouldn't say here in the U.S. because this is a Danish company. These are commonly used for weight loss drugs. Were linked to a higher risk of bowel obstructions and other gastrointestinal side effects in patients with obesity than an older treatment. So we're talking about stuff like Ozempic, Wegovy, Saxenda. These are those drugs that are in vogue, the injections that everybody's talking about right now.
Yeah, they're talking about some of these drugs likely, roughly 9 times more likely to develop swelling of the pancreas than those taking Contrave GLP-1 drugs. Were also associated with higher risks of bowel obstruction and delayed stomach emptying. Sorry, it's a little graphic, guys. But listen, you know these drugs, a lot of times they can do good, but there's also a lot of side effects. We're learning a lot more, and especially as more people are taking them, we're finding about the occurrence of some of these side effects. Read more at Bloomberg.com.
Stomach emptying.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Hi, everyone. Bloomberg Business Week continuing. We are live from the 6th floor Bloomberg Link at Bloomberg headquarters. We're here because the Sustainable Business Summit has been going on, and we appreciate the conversations that we have had and some of the insight. We're also on YouTube and, of course, on Bloomberg Originals.
Yeah, I'm Tim Stenivek along with Carol Masser. Coming up this hour, we take a deep dive into the international cover story of Bloomberg Business Week, the aftermath of an assassination inside the India-Canada crisis, and how the killing of a Sikh activist exploded into a stunning confrontation and turned into a test for a rising superpower.
I feel like it's been a little bit under the headlines, no pun, it's been in the headlines, but I feel like with everything else going on, but it's a really interesting, important story, and it makes you kind of think about the place of India going forward. Vince Perrotta is also going to be with us. He's the Chief Operating Officer of Omni Hotels and Resorts, so we get to check out
How are people spending their money?
Leisure industry.
Yeah, that's what I want to know.
Yeah.
Also, how is it getting employees right now?
Exactly. Good question ahead of that monthly jobs report. And
the on and off again SBF girlfriend, Caroline Ellison. She helped SBF build the crypto hedge fund Alameda Research. Prosecutors believe that she is one of the only ones who actually knows the truth.
So is the girlfriend and boyfriend. That's what I like to say.
You keep saying that.
I do, cause they know everything. All right, let's get a check on your day's top stories. Another busy day here in the markets. Here is Charlie Pelley.
Hi, thank you very much. And here's what's going on. Keeping an eye on shares of Levi Strauss after hours. The stock now down by roughly 4.5%. Levi reporting quarterly revenue that missed expectations as performance at retailers, including department stores, dragged down results, leading the company to cut its full-year sales outlook. Again, after hours, Levi Strauss down now by about 4.5%. Down day on Wall Street with the Dow, the S&P, NASDAQ all declining today. Stocks and bonds backing away from the worst of this week's slump, but tomorrow morning's data threatens to perhaps spark a new slide. Here's where we ended the Thursday session. S&P 500 index lower, little change, down by about 0.1%, down 5 points, 42.58. The Dow ahead of the jobs report down 10 points today, 33,119, drop there of less than 0.1%. The NASDAQ Composite Index down 16, drop there of 0.1%. NASDAQ 100 Index up by 0.4%. Interestingly, the Russell 2000 Index of small cap shares was up 0.1%. 10-year 4.71% with the 2-year at 5.01%. Spot gold 18.20 the ounce, while West Texas Intermediate crude was down 2.3%, 82.31 a barrel. So a down day on Wall Street for the equity market. Alan Lance, research director at LanceGlobal.com, a guest right here on Bloomberg Business Week, told us the market is coming to grips with higher for longer.
Unfortunately, I think what reality coming in now is that, we might not have a decline in interest rates, and if we do, it might be for a negative reason, like a recession, right? So I think that's what investors are contemplating now, and where the challenges are, where you want to be selective but gradually buy. I don't think there's anything atypical to this. I mean, we kind of went through it last year at this time as well.
And you can hear more of that conversation on the Bloomberg Business Week podcast. Oil, as I mentioned, extending its retreat. WTI crude now below $83 a barrel, $82.31. Oil stocks mixed today. ExxonMobil down by 2.2%. ADRs of BP up 0.3%. Chevron up 0.5. I'm Charlie Pelley. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Masser along with Tim Stenivek live here on Bloomberg Business Week. We do want to get to a story that is the international cover story of Bloomberg Business Week magazine. And a little bit of backdrop. Back in June, a government Sikh political activist named Hardeep Singh Nijjar was gunned down in Surrey, British Columbia. It's a suburb just outside of Vancouver.
Yeah, the killing, Carol, has escalated into an international crisis. It's raised broader questions about efforts by Western governments to turn India from a friend into something more like an unofficial ally.
Exactly. Prime Minister Justin Trudeau has accused Indian agents of involvement in killing Nijjar. He was a Canadian citizen who advocated for the creation of Khalistan, an independent Sikh homeland in the northern state of Punjab.
But the government of Prime Minister Narendra Modi calls the allegation, quote, absurd, and says that Canada is harboring Sikh figures whom it considers terrorists. Modi's government also blames these figures for instigating violence within India.
So that's like the basic story, but we want to get into the details because there's a lot of underlying currents here. The story, as we said, the international cover of the equality issue of Bloomberg Businessweek magazine, which is currently available on newsstands. It's also on the Bloomberg and at Bloomberg.com. Let's get to it with Ari Alstetter. He is Canada real estate reporter at Bloomberg News, and he joins us from our Toronto bureau. Ari, you know, it's funny, not funny. We've been talking about this story a lot in the newsroom because it really seems to potentially have some significant consequences for how we look at India, geopolitically, and just a lot of other serious issues. But again, we laid it out briefly, but tell us about, you know, maybe even the conversations you had with Jill Weber, the editor of the magazine, about why we had to do something on this story.
Right. Well, like you said earlier in the program, I think for an international audience outside of Canada, this really has been flying under the radar. But that really undersells how important it is. Because, as you say, India was really looked to, or has been being looked to by, you know, Western democratic countries as a potential democratic counterweight to the rising power of China. A billion-person country that is in Asia, that Western democracies could look to sort of represent their values in the region and champion those values in the region. The problem with that for the last few years is that even as Western countries like the US, France, the UK, and Canada have been trying to cultivate India as a friend, the government of Prime Minister Narendra Modi has taken a liberal turn back home. Opposition politicians, journalists, minority communities have said that Mr. Modi and his Hindu nationalist BJP government has cultivated a climate where speaking against the government line is a risky thing and could incur legal penalties, harassment, all sorts of unpleasantness from the state to try to induce people not to do this. Now, expediency sort of allowed or demanded that these Western countries turn a blind eye to this for as long as it was happening in India, but the murder of a Canadian citizen on Canadian soil is something Prime Minister Justin Trudeau couldn't look away from. And that puts his allies in the U.S. and the U.K. and France and the other countries in an awkward situation, too. Because on the one hand, you know, killing each other's citizens is really an unspoken rule. There's really an unspoken taboo against this among all these Western countries. India violated this. So what do you do with that as you want to continue to cultivate India as a friend?
So that's a really good context for the background and the backdrop of this assassination earlier this year, back in June. Let's go back to who Hardeep Singh Nijjar is or was.
Well, right. He was a Canadian citizen. He owned a plumbing business in Surrey, British Columbia. He had a wife and two adult sons. He was also president of his Gurdwara, which is the Sikh temple. But most relevant is he was